set and
Yeah,
forget.
Do what makes sense for you, whatever you want to trade when it comes to risk reward, but understand we're all up against the same math, which is creating a positive expectancy, having some combination of win rate and risk reward that generates money in the market.
Are A+ setups a scam, or are they something you should be aiming to figure out how to find? What's up, traders? Welcome back to the podcast. We've got another roundtable this week. This time, I've swapped out a couple of the traders, but we're going to focus this conversation on, instead of prop trading, we're going to focus it on just the technical and psychological aspects that go into profitable trading in general. Doesn't matter what prop firm you trade with, doesn't matter what strategy you trade with, you're going to get tips across the board here from these guys. Let me introduce everybody really quick, and then we'll jump in. Our newest addition to the panel today is Lawrence. Lawrence Briscoe is here. Lawrence, the investor, joining Chris Drysdale on my right. And we've got Clay Hodges and Zach Boyajian on my left. So you don't know the boys. They've all been on the podcast multiple times. I said this to Tanner this morning. I feel very like my job with this podcast has become to not interview scammers, which has ended up in me interviewing the same great traders over and over again and getting their entire journey over years, which is super cool. So across the board here, we have combined over 30 years of trading experience. So for the listener, maybe in year 1 or year 2 or 3 or 4, and just maybe not profitable yet, you're going to get a ton out of this episode. So if you're driving, don't take notes while you're driving. Maybe listen to it again when you're at home. But I'd recommend you sit down and you actually try to do not disturb the phone, get off the Instagram and the Facebook and really lock in here. Because I think even from the first panel we did today, there was a lot said that I think a great tip happens and we just keep moving. So it might take a couple of listens to really get the whole meat out of this. But enough out of my intro. I think we'll just jump right in with a controversial take. We're going to talk risk reward. We're going to talk entries. We're going to talk VWAP. We'll talk volume profile. We'll talk everything. But this concept of A+ setups. So we'll go to you first, Lawrence. I think more and more people are talking about waiting for my A+ setup, waiting for my A+ setup. But on the other side of the coin, we have people that are like, there is no such thing as an A+ setup. Every setup is unique and it's all variable. You have to apply discretion to it in order to make it great. So I'd like to get your take, and then we'll go around talking about, are A+ setups a scam, or are they something you should be aiming to figure out how to find?
Yeah. I think that it's a nice combination of both, meaning that you can have an A+ setup, but that doesn't mean that you need to increase your risk.
Okay.
So just because you have your setup that is A+ that you've seen a million times, that doesn't mean that you should break consistency by increasing your size. Like me personally, when I see my A+ setup, all it does is increase my conviction and make me a little bit more comfortable when something of value is on the line, which is my money. So you can have an A+ setup, but I don't think that you should, like I said, break consistency with your risk like you do every other trade, because there's no difference from a consistent trader with a profitable edge as a successful trader.
Does anybody want to take the other side of that?
I kind of like the idea that there is no such thing as an A+ setup. Okay. You have A+ conditions and maybe you're in the zone or trading well, but like no setup is exactly the same in the market. So it just because something's A+ doesn't guarantee that it's going to play out in your favor, which is why I agree with what Lawrence said about not putting more risk on the line if this is a setup you're more comfortable with.
I'll try to take the other side of this one, because I do think it's a hot topic, right? Like traders will argue for and against that. Consistent risk. You don't know how any edge is going to play out. You've got to put the same stuff on every single trade and then just let it rip. And then the other side of that is, and something that I've been attempting to do, is a lot of traders will say, what really, really high probability conditions look like, which isn't a great term, but what that A+ day and setup looks like. You're trading well, you're in a position in your account where you're set well, and it's time to put your foot on the gas and press it. And I do think there's something to be said for that. I think a lot of successful traders do have the ability to know when the market is agreeing with them and they're executing well, because I do think it's a combination of both those things, and they will size up, they'll increase risk within reason, right? Without just turning into a complete degenerate gambler. I do think coming up, this is, how I started to gain more consistency, being consistent with risk, understanding how many trades per day you're going to take, what your risk per trade is, what your total risk per day is. And until you start to gain some consistency there, I don't think you've earned the right to size up on individual setups. You probably can't identify them. And then from a risk management standpoint, it just makes it incredibly more difficult. So I don't know that I'd say like I'm a big grade the setup, but I am trying to get to a spot where I know what a really, really big potential trade looks like. 'Cause that's the other side of it, right?
One of the biggest mistakes that I see traders making is they're choosing their prop firm based on emotion instead of logic. They're chasing cheap accounts, flashy payouts, or whatever somebody posted on Twitter without understanding the rules, the drawdown mechanics, or whether the account even fits how they trade. That's why I'm really excited to announce today's sponsor is Prop Firm Match. Prop Firm Match lets you compare over 40 different vetted prop firms on the stuff that actually matters, like trailing versus static drawdown, payout rules, copy trading limits, pricing, and long-term scalability all in one place, propfirmmatch.com. What I also really like is firms that I've actually traded with, like Top One Futures, are listed on Prop Firm Match as some of the top firms for 2026. So you're not just getting random rankings, you're seeing real, relevant options that serious traders are using. Now, if you're treating your trading like a real business and you're not trying to gamble between account roulette to hope your payouts hit, head to propfirmmatch.com, do your research, and then use the code MATCH at whatever prop firm you choose to save the most money possible. Again, propfirmmatch.com, compare your firms, and then hit that code MATCH with whatever firm you'd like to save on your next challenge. Now let's get back to the video.
Maybe that is a plus, not to go for too long on this one, where sometimes I say market conditions, are really looking like we got a chance for a big movement here. I'm going to increase size because I think the reward on this could be very outsized relative to what we have, when we're ranging or chopping around. So,
And one thing that I did like that you said was every single time that you talked about an A+ setup, you used the term probability or more likely. Like A+ setup is not a guarantee. It's not certain. And that's why I always say, mind your risk. And I don't think that risk should be a discretionary thing. Maybe your entry can be more discretionary because me personally, I believe the stop loss is the most important thing. Your profit target and your entry, you can be a little bit more discretionary with. But if you think about it, every time that you believe that you have an A+ setup and you put your foot on the gas, you are psychologically investing yourself more and more into this trade. So once it turns against you, it invokes tilt automatically. Like you're not really preparing yourself to think that, oh, what if this goes wrong? And what is this loss going to look like once I put my foot on the gas? So the more you are convicted and the more that you invest yourself and the more that you just think that you're right, once it goes against you, just maybe for a simple pullback, maybe just, price needs to take its,
It'll mess you up.
Yeah, it'll mess you up, right?
Yeah.
you're not ready for it.
I just think that risk should not be discretionary. I think it should be static. I think that entries and take profits should be more discretionary.
Okay,
So-
Chris, what do you think?
Well, in the VWAP wave system, we have the grading system very cleanly defined. Okay. So we do have a grading system and we very much have A, B, C setups, and there is a plus designation and it's defined. So we already trade 4 core setups in the system. And by the nature of it, we have confluences. So we use 3 major tools to decide our setup location, the volume profile, the initial balance, and the VWAP and its deviations. So if we have just one level, right? Let's say we just have the VWAP. That's a C setup, C by itself. If we have 2 lining up, we have the VWAP and a low value area low of the profile. We now have a B setup. If we have 3 confluences together, the initial balance high, value area high, and a VWAP deviation, 3 confluence is now an A setup. There's no Ds. Everything else is a fail. There you get an F. The plus designation is if one of those 3 levels is a higher time frame level. So maybe it's the weekly VWAP. Maybe it's a composite low volume node, right? So it's all cleanly defined. That way, when I'm going through my students' journals and they're grading, I know whether they're grading correctly or not. It's not subjective. It's not just like, oh, this looks like an A+. In that same vein, it's not more probabilistic, so to speak. Okay. All of our setups are high probability. Otherwise, they wouldn't be setups.
Yep.
Okay. So what we do with the grading is that we have bigger expectations out of the setup. So
Meaning
maybe
it
a
goes
bigger rotations, travels further, the risk to reward, the multiple is higher.
Sure.
Right. So we have bigger expectations out of this A+ than we would out of a C. So we might treat a C so much more as a scalp versus I might be looking to hold this one a little longer because this is a much more viable level. I expect to get more out of this trade without risking as much.
Would you have them size up for the A+?
We can.
Yep,
Yep, absolutely. Or
But I feel
scale
like this
into
is
it.
the point, right? So it's like
Mhm.
we're all agreeing there is something to be said about high probability conditions versus I have no idea what this is doing, but I can read it, right? That's like A setup. I know what we're doing here.
Mhm.
C, I'm reading a VWAP. I kind of know what we could do. I
Mhm.
could buy it. I could sell it. I could see both sides of this. But I think then the nitty gritty of this is, do we hit the A setup harder?
Yeah.
Yes or no?
I would say not necessarily.
Yeah,
I would
so
I
say
think what Chris is saying is that he's allowing the market to make his money instead of leverage.
For sure.
Yeah.
I
yeah,
like that.
and I think that that's the lesson that a lot of
Mhm.
traders
because
need.
the bigger size,
yeah.
you're in this, let's just call it 70% of
Right.
the time it wins.
and now I'm also more emotionally invested.
That's what he was
in
saying.
this
Right.
setup.
Exactly.
And I don't need that.
Right.
I need to be emotionally squared off.
So then if you think about it, you see this setup coming. This is my A plus.
I'll hold it longer. I expect
There you
more
go.
out of this.
I like that perspective,
Mhm.
Yep.
which you don't hear as much as you hear. I have an A plus setup coming. I'm going to size up.
Right.
And then what that does is you take a good setup. It's a 30% of the time it might lose, 40% of the time it might, 50% of the time, 50,
Mhm.
whatever the number. And now just by roll of the dice, you took this bigger loss that could
Mhm.
take days to claw back in sizes or in setups that you would trade at like normal size.
Yep.
So I feel like what we're all kind of getting at is it's cautionary to just blatantly size up in a certain play.
Yep.
Is it fair though that maybe in other markets, like in stocks, there might be a reason to do so? I feel like where the traditional like size up in your A plus setups comes from is in equities, not
Yeah.
in future. What do you think?
I would say it depends on your trading style and
Yeah.
system. I think there are cases to be made, like Tanner was talking about earlier. He was hearing from traders that make 80% of their profits in 10% of their trades.
You can't do that without sizing up in certain trades.
Right.
Mhm.
And so that's an example of how that one person trades.
Sure.
Right.
But I think
And
your
that's
way is easier.
mine. Yeah, I would agree.
Figure out how the setup
Mhm.
can present for you, but run further,
Right.
be a bigger
Mhm.
move, and then make that one, like you said, make the market do the work for you.
And not the leverage.
That makes more sense because you can trail your stop and you
For
know,
sure.
just try to milk it with minimal risk rather than
correct.
just risking more because it looks good, right?
I think what a lot of traders will find is a combination of the market conditions, like that day setting up. And I think I'm sitting here trying to ask myself, do I have that A plus style set up exactly? Is it a confirmation? But what I find is maybe we have a really clear indication of one thing happening over another. Doesn't mean that it's going to happen at all. Mark can do whatever it wants to do. And I'm more discretionary with my entry and I'm more discretionary with my target.
Yep.
I'm more apt to say, dude, this market is ready to fall off a cliff. If it falls off a cliff, it could be a really large movement. Doesn't mean it has to, absolutely not. But maybe I'm more apt to jump in rather than waiting for a really aggressive pullback. I'm closer to trading a breakout. And then if it starts to break on maybe, 8 out of 10 days, I'm holding for 20 points, just random numbers here. On that day, I'm holding for 100, right? And I do think, again, it's important to note, like, that's going to come with time, really only going to come with experience. And for beginner traders and guys that are starting out, I think probably haven't earned as much of that for yourself. Not like, oh, I'm holding it, but you really aren't going to be able to handle when that bigger trade comes back on you, right? You're more emotionally invested.
Yep.
I will say there's probably a case to be made for sizing up, for just doubling up size and doubling up the amount of risk on that trade. Maybe if you're super mechanical with rules, I think you might find that a little bit more. But the way I see it for myself is how I could potentially have an outsized day or maybe take a really aggressive loss would be in conditions that seem really, really well, that are aligning across, whatever tools I'm looking at to create technically an A plus trade.
Yeah.
And also something I'm going to manage differently than I would any other day.
I'd like to revisit what Austin said. You see it more with equity traders than you do with futures traders. As futures traders, we're already leveraged to the gills, right?
Yeah.
You don't see that in equity
No.
trading. One MES or one MNQ is a notional value of $50,000. You're trading one NQ, it's a $500,000 position. We don't talk about that, right? It's very much the nature of how we're trading. So, it's easy to oversize in futures more so than it is
Great
with stock
point.
trading.
Great
Yeah.
point.
And one last thing, I'm
Yeah.
sorry.
No.
So when it comes to an A plus setup, because Zach reminded me of this because he talked about mechanical trades, right? There was 4 months where I took one trade per day. And what that did for me was, and this is for traders who want to figure out what their A plus setup is. When I took one trade per day, I did like a checkbox method. Each checkbox represented a step in my process before I entered the trade. And when I did one trade per day, it made me realize when you have one bullet in the chamber and only one opportunity, what opportunities are you willing to take and what opportunities are you willing to forego and why? So at that point, that's when you dictate what your A plus setup is if you need to find it, so I just
Great
want to
point.
throw that
Mhm.
out
I
there.
want to come back
that's
to
a great process.
I think the one trade a day thing will be a good conversation. I don't think Chris even understands what that means. So we'll come back to that. I think that this podcast will spell that for me. I think this podcast will be really good because I think what we're going to do over the next couple minutes is break some of the trading bullshit rules that are applied when new traders come in. Like people will be thinking about that. Should I find these A+ setups? We just gave them good information on that. So let's go to the next one. Okay. Indicators. Can indicators make you profitable? Yes or no? New traders watching want to break out. They want to become profitable. Will the indicator make or break them?
As far as day traders, I think that you should only be worried about leading indicators, which is price and volume, because that's our entire thing, right? Like we want leading indicators to help us make an educated guess.
So
right?
will the indicator make you profitable? Other than price?
It's gonna put you on the.
I mean, anything can make you profitable. I know that's a shitty answer, but as long as you're consistent, almost anything can make you profitable. I wouldn't advise anything
I don't
outside
think
of
that's a
leading
shitty
indicators.
answer. I don't think.
Yeah.
I think it's a good answer. What do you think?
I think the indicator is not going to make any money. Now I'm an indicator user, but the indicator in and of itself is not going to give me the signals necessary. Otherwise, I wouldn't need to trade. I would just automate some signal, whatever time this crossed this and price was doing that. I could go sit by the pool and drink margaritas. But the reality is I need to learn how to read the market. And I think indicators are a huge tool. My system is based on VWAP and volume and weighted price. And it's important, but those are skills that need to be learned. And then once you learn how to read them, how do I take that information to make logical and well-reasoned trading decisions?
Okay.
And that doesn't come easy.
No, definitely not.
Yeah.
Do certain indicators work more than other indicators, or do they work just as much as you believe in them?
I think that everything that Chris said, those indicators are all based off of
Like, does VWAP work
price
better
and,
than
price and
Fibonacci?
volume.
You see what I'm saying, though?
Yeah.
Like, if does a volume-based indicator work better for a new trader than a price-based indicator?
I don't
That's a
think
good
a new
question.
trader has the ability to discretionarily develop the rationale to make a good
I
trade,
agree with that,
whereas they're more looking for the indicator to tell them to buy here, sell there.
Mhm.
and that's the wrong.
And that's
thing.
not going to work.
That's not going to work.
Yeah, I don't think any indicator is going to make or break you. To start, for anybody listening in, I think it was really important for me to recognize early on because I was on the same hunt as everybody. Indicators
Give me
across
the
the
Holy
board.
Grail.
Yeah. Where is it? Like I'm going to find it. I need more. I need more information. I'm going to use this information to then make better educated trading decisions, make more money. I didn't realize until it was really pointed out and then in my face. Every indicator, nearly every indicator that you're going to overlay onto your chart is a byproduct of price, time, and volume.
Yep.
There is no new information. It's just representing it and displaying it to you in a different way. So if that's an advantage to you and having multiple of them is an advantage, as it is for me and for so many, use whatever you need to use, but recognize that you're just displaying price, time, and volume in a different way. You can use things like order flow, and liquidity on the outside of that. Maybe it's some different information the candlesticks and volume bars are going to give you in itself, but it's really just displaying it in a different way. So once you recognize that, I think use the tools that you want to use as a trader, whatever you build confidence in and build discretionary reading around. And really that comes from sticking to, at least a small subset of things, keeping it pretty simple, and then doing it for a long period of time. But I think that's why we see so many different traders. Some guys use straight up price, just price and volume, nothing on their chart at all, multiple indicators, and they can make it work doing it both ways. So there's the answer you're looking for in profitable trading is not in any indicator. You might find an indicator that you really like that resonates with you and your style, and it's important to try different things until you get around a system like that. But one indicator is not going to create some big edge in the market for you.
What do you think, Alec? A longtime friend of the podcast, TradeZella is offering you, as the listener, 20% off their journaling software. The back testing is incredible, and they have a ton of new features coming in 2026. So use the code ASFX to save 20% at TradeZella.com. Again, the code is ASFX at TradeZella.com. Hey traders, you've probably heard me mention the Black Shirt Club before. That's our group coaching program. We meet 3 times per week. We actually have a meeting today, and we are looking for some of you to fill empty seats in the mentorship. A couple of people just graduated to finish the year, so we want to make sure the group stays full. Head to asfx.biz/BSC to read more about what the club includes, you can also go to that website and book a free call with me. I'll hop on with you for 10 minutes and I'll answer any questions that you have. This is a $500 a month program. No like crazy fees, no hidden contracts, no cancel anytime. We're very flexible. We're not here to hurt you. We are here to help you make more money and help you get around traders that are trying to better themselves through more discipline and more accountability. So if that sounds like something that interests you, asfx.biz/BSC.
Yeah, I think whatever it is that you do find, whatever that looks like, don't switch around and switch it to something different every 3 months, 5 months, or whatever.
As soon as you
So-
take a loss.
Right. So then you're just looking around and it's like because looking at a chart, it's like you get used to looking at that every single day, right? For hours at a time. It's another thing too, because when I was like teaching people and they'd go on, go on tilt or on a losing streak and we do like one-on-one and their chart looks completely different. Like the colors of the candles are different. And I'm like, dude, you're just like rearranging the deck chairs on the Titanic type thing, right? So same thing can happen with the indicators. So
Good analogy.
Right.
I mean, like too much information,
Yeah,
too much
so, like,
switching of the information.
exactly.
Yeah.
So like then you can't really build that home field advantage for
Right. Because you're
yourself.
like, well, my Fibonacci says we revert from here, but my VWAP says to buy here.
right,
Like,
right.
yeah,
And then
too-
you just get a ton of mixed signals,
Yeah,
right?
agreed.
And become confused, which we've all been there, and especially beginner traders in the market. I liked what you said about do they just work as much as you believe they do? What like so like a
Well, I mean,
placebo effect with it?
in a way,
The placebo would work though if you don't change it, right?
if you don't
Like,
change it. Well, I think what everyone has said is that the indicator is not going to enter or exit the trade in profit or at a loss
Right.
for you. You're still going to have to do that. But the information that the indicator can provide can hopefully help you get on the right side of both of those transactions.
Otherwise,
Yeah.
all bots and
All bots would
everything
work. Like you said, you just code it.
exactly.
Talk about
But I
that.
think that's like, again, we're proving fallacies wrong here. The
Mhm.
fallacy is indicators don't work. No, you're using them wrong. You're looking to rely on them for entry when you're a new trader. When I started trading, it was 8 and 21 EMA. I trade the 8 and the 21 crossover. And this and that. If it was that easy, it'd be coded already.
Mhm.
You know what I'm saying? So I think that's a very valid approach.
Yeah, indicators are not by any means going to give you that satisfaction of having some type of certainty or guarantee in the market. It just can't give it to you.
But they can streamline your analysis. I
Right.
think they can make
For
it
sure.
Finding
faster.
bullish,
Absolutely.
bearish, creating
Yes.
a bias on what's
Yes.
going on in the market. I think that's a great approach, but then the execution obviously is up to the trader themselves,
Totally different.
right?
Yep, 100%. Okay, so we covered A+ setups. We covered indicators now. And chat, if you're watching, comment below if you have more questions. We'll answer them in the comments. I think that that's a good place to start. So now let's take a deep dive into this, like, I think hot topic about, on the technical side, risk reward, because this is super important. I think it's become probably the most, like, if you talk about it, you're going to get ripped up. Negative risk reward specifically.
Mhm.
So I think you two will probably have different perspectives on this, and I think you too. So this can be a little bit of cross contamination here. So let's start it like this. For someone like yourself, Chris, how many trades per day on average do you think you take?
I take about 10.
Okay, so you get a lot of information.
Mhm.
Lawrence, how about for you?
Max is 2.
So between the two of you, we know how you feel about A+ setups. We know how you feel about indicators. But now, specifically with the setups that you're taking, is there any predefined standard that you have, Chris, you first, about like, because I take so many trades, this is how much I'm willing to risk.
Mhm.
This is what I'm looking to do. And then we'll go to you.
So I do have a max loss per
Okay.
trade. I know how much
Per trade.
I'm willing to lose on a trade.
Okay.
However, the risk to reward is not defined.
Okay.
Okay. I trade the structure in front of me and I trade the setup.
So predefined stop, trading how the market presents for you
Mhm.
will determine how you
Right.
take profit,
And then I trade the way I trade accordingly.
which has nothing to do with positive or negative R.
Does not.
Interesting.
So at the end of the session, where my R multiple, where my risk reward ends up, I can tell you on average, usually between 0.8 and 1.5.
Okay.
Almost always.
Just curious, do you go by percentage for your loss limit, or maybe it's
I
different
do.
on your personal account? than
Yeah,
it is
I
when
mean, it
you
would
tell
be
your
based
prop?
on my drawdown or how much I'm willing to lose that day,
Right.
dividing it up. Yeah.
Okay.
So it could be $500, it could be $1,000, whatever.
So
it is.
no care for you about risk reward. Care more on the stop loss. Care more about how the market is reacting will determine how I handle the
Correct.
trade.
And some days I'll have a nice 1.5, which I'm very happy with.
Yeah.
Some days I'll be profitable and I'll have a slightly negative risk to reward.
Sure.
Right. On a losing day, it's still 0.8 or to 1.5.
Yeah.
However, my win rate was probably a little lower that day.
Lawrence,
I'm going to range between 1.5 to 2R every single trade.
Okay.
I'm really big on law of large numbers, probabilities, being a casino owner instead of a trader. So
Are you hitting specific targets with the trades different from him?
See, that's the thing. I'm a pattern-based trader. So once I take my entry, then I'm going, no matter what the market looks like, I don't care. I'm going to go for the 1.5 or the 2R depending on volatility.
Is that a set and forget?
That's a set and forget.
Set and forget.
I'm playing
So
the
very
numbers.
different.
Very
Yeah,
different.
I'm
I'm
playing the
trading
numbers.
structure directly.
Yeah, completely different. So for me, I need my data to be consistent, like completely consistent. I want it to be completely clean. I want 2 trades per day, absolute max. And then once I upload into TradeZello, whatever I use, I need consistency so I can know where I'm, excuse my language, fucking up at.
Right. And then we're going to make
Mentally.
improvements.
Yeah, and then make improvements from there. Because if my results are all over the place, and I'm not saying your results are all over the place, but if my results are all over the place, then I won't know if it's me or if it's the market. Yeah,
Okay.
for sure.
Fair take.
That's what I love about these, because there's so many different ways to approach this. So we got two, similar in some areas.
It's like I planned it.
Yeah, there you go. We got a big mix up here. No, this is great. And just like you guys were saying, not to talk about what you're talking about before I give my answer, there's a double-edged sword to everything, right?
Yeah.
So I'm going to lean in on that. What Lawrence was just saying is by having a really structured target risk to reward on every single trade and ignoring, maybe noise of the market in between, just letting it run, you're going to end up with really consistent journaling results. Downside, maybe you're not able to utilize your discretion and your intuition and your experience in the market to manage that trade. Chris's side, you're going to have a much more difficult time creating and journaling, especially early on, these more consistent, repeatable, trackable, results. But you're allowing yourself the discretion, the intuition, which all manual traders are attempting to do, which to do what makes sense, right? Trade the market in front of you. So it's awesome to see it done so many different ways.
Mm-hmm.
The one point I want to get across for me, and I've yapped about this a lot, something that held me back really early on was I had this belief that there was an inherent edge in risk to reward alone. And that's not the case. That's just not the fact. There is no edge in a 2-to-1, 3-to-1, 4-to-1. It's different things when it affects expectancy differently. But by having a 50% win rate and a 1-to-1 in completely random market conditions with no spreads, fees, commissions, which we all know will eat into it, you would end break even. If you entered randomly in that same random market condition with no spreads, fees, commissions, anything, with a 2-to-1 risk to reward, you would still break even. Somebody can debate me in the comments about this one if they want to. You would end break even. You would technically, in our day, lose money, but you will just end break even with a lower win rate, whatever that natural break even win rate is, because I don't know it off the top of my head, for a 2-to-1 or a 3-to-1 or a 4-to-1. Same is true with a negative risk to reward. If you entered every single trade with risking $100 to make $50 randomly, less spreads, fees, everything, commissions, you would end break even with a positive win rate, right? With a win rate over 50%. So our job as traders, if you accept that fact, the math behind that, our job as traders is not to say one is better than the other. Again, they have some unique differences when it comes to calculating expectancy and what your equity curve will look like, which is important. But what is the market making available to you for your system, your approach, your style of trading? And then also, are you somebody that is able to handle maybe a lower win rate, higher risk to reward, and benefit from what that means when it comes to calculating expectancy? And that's what the market gives you, a lower chance of this happening. But when it does happen, it pays off 5-to-1. Maybe you're someone that says, I can find trades all day where I'm making $100, risking 300 all damn day. And I'm going to run a win rate that supports that. That's great. Get after it. So I think so many traders are taught you need to make double what you risk on every trade. You need to make triple what you risk. You need to go with a 3-to-1 risk to reward. And same is true with negative risk to reward. So it's this hot button topic, but the math in between gets ignored. So my 2 cents here would be, do what makes sense for you, whatever you want to trade when it comes to risk to reward. But understand we're all up against the same math, which is creating a positive expectancy, having some combination of win rate and risk to reward that generates money in the market. And one is not inherently going to make you money while one is going to lose you money. It's, do you have a win rate past the natural break-even win rate of whatever your risk to reward is, or if you're discretionary, whatever your average win and loss is, because maybe you're not fixed on every one, to start to make money. And I think if you distill it down to that a little bit, it frees you up. It kind of frees you from this, I have to have a 3-to-1, R, or I have to be at 1-to-1. You can kind of look in front of you and say, this is what my system is going to allow for. I'm a 1-to-1 trader almost every single day, maybe a little bit less, but I've got a win rate to support that. That's fine. Get after it. Maybe you are a 10-to-1 trader. You're always going for this big home run. It almost never plays out, but it plays out enough time to pay you. That's great. Send it. So like, I think we're all on the same team here as far as like the risk to reward win rate argument, because the math is, is the truth behind some of that. And I'm not the math guy. I'm not the stats guy, but that was something I held on to. Like I had to be a 3-to-1, had to be a 2-to-1. Anything less than that was like an ego shot. Like you're a bad trader if you can't, get that. And it's just not the case.
Do you want to add anything to that?
Yeah,
Really-
yeah. I mean,
really
a little
well
different
said.
perspective. Different perspective on that. Like top one futures, for example, usually are the people that take the most payouts is about a 1R. We don't hardly ever see 3-4 R's. Sure, it happens, but trading futures and having where you have to be out by the end of the day really limits that. The flip side, some of the people who've done the best for top one trader on the FX side have been swing traders. That's where it's possible for them to do 4R, 5R trading
in that
off
swing trading environment.
right, trading off a much higher time frame.
Yeah.
So like I think if you're trading futures and prop, for example, going for higher R's probably not the best strategy because it's harder to do. I think. I mean, it's not,
because you're constrained by the time.
right. Yeah,
I
it's
think
hard
it's
to do
fair
on
take.
a minute time frame.
Yeah, for sure.
Like hit a 5R trade, like if not impossible. Right?
Yeah, I tell people all the time, time is not your friend as a day trader.
Right. Yeah. So swing trading, a whole different ball game. I think
Yeah.
that's where, like, if you read Market Wizards and stuff, there's guys in there that were super low win rate, but huge risk reward, but they're holding trades for weeks and stuff.
Months,
So,
right.
months at a time. So I think that's a big factor. If you're trading futures and prop, shooting for a 1R, maybe a little bit less if you're super dialed in like Austin and experienced, or Chris. If going for 1.5 R, like in between there's where you're probably going to get the most
Where
results,
you're seeing it, at least.
right?
Yeah.
And then with FX, because you can trade through the close,
Swing.
it's fine. Yeah, you have a different possibility for that. It becomes much more real, I guess you would say.
Did you have anything you want to add on that?
No, that was excellent. Go
Okay.
ahead.
I think your take is very good. I
Mhm.
think your points are also super valid, Clay. I feel like people think risk reward is going to make or break their profitability because it's easy math. And they want to cop out to, if I risk 5 every time and then I get 10 every time, I'm going to be profitable.
Mhm.
When in reality, the market, I feel like often for me as a scalper, a day trader, it doesn't work like that.
Right.
So in this conversation of risk reward, where we can all agree the market does not care where you put your stop loss to go get you your 2R.
It's kind of like, with the World Series of Poker, and you see the dude that has like the 2 aces, and it's like statistics 97%.
Yeah.
He wins his hand, but
Right.
by the time the river comes out, it's like
He's
he's
cooked.
already lost.
Yep.
So it's kind of the same deal, right?
Yeah. Does the risk reward conversation have a difference depending on what market you're trading? Absolutely. Does it depend on what time you're trading? So then, yes. So then let's lead it to this question. With the words like day trading and scalping and swing trading, that becomes very blurry to traders, especially to a new trader who's watching this to debunk, profitable trading bullshit. Where do I fit? Right. So I think we're going to tie these two together. Risk reward and the type of trading you do has to come back to knowing yourself. So let's go around again. Let's talk about, are we telling traders to focus on scalping? Are we telling traders to focus on more like intraday trading and being out at the end of the day? Where do we think there's more profits? And then how does that play into knowing yourself to then know, should you be going for these bigger R multiples? Who wants to jump on that first?
And I think that's a great question. It's actually really thought provoking. In terms of just on the R multiple in general, though, if we're talking about probabilities, the tighter the stop and the bigger the profit target, probabilities dictate that the stop's going to get hit before the target. That's just
100%.
the nature of price and how it moves and how it meanders. Price never goes in a straight line. It tends to oscillate and take some meandering path to where it's going. So that's what in and of itself makes R multiple strategies very difficult.
Yeah.
So as an educator, a trading educator, I like to take somebody who's newer to trading. I like to start them off with scalping and trying to figure out, hey, what is the market going to do in the next 15 to 20 minutes? Okay. Rather than trying, what is the market going to do in the next 3 hours? Especially in the futures market where anything can happen at any time. That's very difficult unless you have a huge stop and you have time on your side. But as day traders, we don't have time on our side. So we have to kind of figure out, with a pretty high degree of probability of what is likely going to happen in the next 10, 20 minutes, maybe hour, right? And everything is an if this than that scenario, right? So if this happens, then I expect price to do this. If this happens, then I expect price to do that, right? And just all of my decisions are made on that based on my trading system. So I think it's much easier to take a newer trader with shorter term, almost like Clay said, one-to-one, R-to-R. Get good at that, right? Find some type of, at least a little bit of profitability there. And then I think you can expand on it, maybe increase your R multiple, maybe increase your win rate.
See, that's an interesting take from you, because I feel like I thought you were going to say you were going to just push everyone to do scalping. So then let's go a little bit deeper on it. What if like you tell someone as a new trader to focus on scalping and one-to-one, but what if that's like not their personality at all? Like, how does that person figure out what will work? Like, you know what I mean? Like, or do you really believe like that's a blanket way for anyone to start?
I don't think it's a blanket way. I think anybody who's day trading, I think it's a good way to start.
Okay.
I think it's a great starting point. I'm like, not to cut in. I take the dumb guy method about it, right? And I do think if you're just hitting a keyboard, entering and exiting with an equally distant stop and target, again, random market conditions, you should be about break even. We know you're going to lose money over time. We know market conditions aren't random. You're trading indices, maybe they trend, whatever it is. But you know, all of that goes into actually analyzing the market and identifying what a trend is, if it's trending up. But if you're starting there rather than a 3R multiple where you need this huge move, you are at very least trying to just improve past where you know a coin flip and random market conditions, you know, are aligning. If you go really far, one side or the other, negative risk reward, positive risk reward, you're having to withstand either a really low win rate, losing all the time, and understanding if you have an edge or not doing that can be so difficult. Same with super negative win rate. You're going to have a naturally high win rate. You're going to win more trades than you lose. That can build too much confidence too quickly. So I do like the more balanced starting point for sure. That's what worked best for me to start to grab onto some consistency. Once I realized that, you know, I think probably every trader that's made it, or maybe you're in the middle of this right now, has that day, not to take this off, where you look at your equity curve and it's a natural slope down and you go, damn, man, if I just hit buy and sell randomly, I would have been way better off. Yeah. I might have actually made money. So if you come back to that and you go, all right, let me just simplify this and distill it down to, you know, one-to-one and trying to get past a 50% win rate, you know, winning and losing. Maybe I can identify some good spots to enter. I can identify, you know, how to manage once I'm in these trades. So I do think it's a better starting point, it just inherently by that math and nature of probabilities than being really far one way or the other for beginner traders.
I'd like to add one more quick thing.
Please.
You know,
I cut you off. So
that's all right. If you are day trading, I think the bigger opportunity is in scalping, right? With the leverage and the short-term timeframes that we're trying to take advantage of. I think that's the biggest opportunity for
that
anybody.
because you're saying
in the prop firms too,
Yeah,
the fact that
in
most
the prop
people are
firms.
trading prop.
Correct.
'cause
Otherwise,
you get good spreads, you get good fills, you could have more trades in a day, is what you're saying,
Correct.
with the leverage. And then
otherwise, I would probably just go to a cash account and swing trade.
right.
Yeah. It's the
But
vehicle for
what-
intraday trading.
When you say scalping, just to be clear for everybody, what time frames are we talking
Super subjective, I think.
Exactly.
What it means
Exactly.
to me
That's
and
what
what
I'm
it might mean to somebody else.
Yeah.
You
about?
know,
What does it mean to you?
to
for your
me, it
time
could be
frame?
as soon as 30 seconds. It could be as long as 2.5 minutes, 5 minutes. But is that scalping? No, I think somebody who's trading for an hour could still be scalping. I think day trading would be trying to hold for a long duration of almost the entire session or a large part of the session.
Right.
Anything below that would be technically scalping.
But how
in
about
my
a
opinion.
scalp that turns into a day trade? I put 10
So it's all
contracts
based
long.
on volatility, huh?
Yeah, like what if I put 10
Right.
contracts on and I'm holding 5 all day? I thought
Yeah.
this was a 15-minute
Well,
scalp, and then
yeah.
Trump tweeted something. Now we're ripping. I'm a day trader now. You know what I'm saying? Like,
Or I own this now.
Right,
Because it's
exactly.
going against me.
Now I'm an investor. Now I'm actually an investor.
exactly.
You know
I'm
what?
separating out. Yeah, so I think that's a really good point. It's like the time frame is subjective in a way of what is scalping.
Yeah.
But I think because the prop firms cap us at 5 p.m. or whatever, 4:10, you got to be out of the trades.
Yep.
It like forces you. Swing trading's not even on the table,
Yep.
right?
So now
You're
we
more-
have hyper scalping, right? So I would almost consider myself a hyper scalper.
Like on the days we have like 30 trades.
Yeah.
Yeah.
Or it's just there's a lot of opportunities. I trade NQ a lot. There's a
Right.
lot of price
Lot of-
oscillation.
Yeah.
I get in and out, and I'm pretty good at it.
Yeah.
You know, I'm fast. I have hotkeys. I do all that kind of stuff.
Do you want to share your take on this? Because I know you're a little slower.
Yeah, I agree with Zach. I think that starting out as a beginner day trader, you need to get as close to like a 1R 50%.
And just find that win.
Yeah, fine. Well, I would say that 1R 50% is going to give you the balance between, you know, I'm the psychological guy. So the balance between greed and fear, right? So we go for a 3R, that's like an ego stroke. You're getting greedy. And then if you're going for a negative R, then that means you're afraid of losing and you're trying to, you know, make sure that the win is more attainable than the loss,
Good
right?
point.
But if you sit here and you start out balanced where you could be more of a fearful trader and more of a greedy trader. And from my experience of coaching, most traders are more greedy than fearful traders. Like if I coach 30 people, maybe 5 of them are more fearful where they're afraid of like sizing up, and the majority of them are like churning accounts and just going for it, right? So
For sure.
I think that for anybody and everybody, for the fearful traders, that 1R, whereas, you know, you're risking 1, you know, to gain 1, you know, that addresses the fear. And then for the greedy traders, when you're risking 1 to gain 1, that addresses the greed. And then from that point, you need to journal and learn yourself from there.
Increase the win rate. Increase the
Yeah,
R multiple
exactly.
whenever
See
you're
what
trading.
because the fact of the matter is, you know, the logic, you're not going to perform when you're a trader. You're not going to perform to the logic of math. You're not going to rise to the logic of math. You're going to fall to your emotions. So whatever resonates most to you when you start at that baseline of 1R 50%, if you're starting out, then you need to learn yourself at that point. And that's what I'm getting at.
Yo, that's the
Yeah.
clip right there.
Yeah,
You're gonna
yeah.
fall to your emotions.
Yeah.
No, and I think like that was the natural progression here. Well, traders go, okay, you start there. Maybe I'm struggling. I come back to a 1-to-1 and a 50%. I don't make money doing that. How do I go from there? And that just comes down to tracking and reviewing. Right? And that's what I like to do and how I try to adjust. Like I plot my executions on the chart. It's Sunday, whatever it is. We're doing, you know, doing the review. What is happening when I enter the trade, right? Am I entering, you know, in a spot where I'm constantly taking heat, or am I entering at a spot where, you know, I'm getting pretty good fill and it's running? What happens after I exit, right? Is the market leaving? Am I leaving a lot on the table? Are these trades continuing to move in my direction? How many out of, you know, the next 30 come back to stop me had I gone break even? How many am I exiting? There's maybe a few points on the table and then they come all the way back to stop me out. And that's going to tell you, based on your style, your approach, whatever your system is, whether, hey, you're doing a great job, you know, scalping away, you know, you're averaging around, you know, a 0.5, a 0.8, whatever the number is, with a nice high win rate, or hey, you're closing out at a 1 or 1.5. These are running. You got, you know, you got 8 out of 10 that give you another, you know, 0.25, 5, you know, and that's worth it to hold on to. So,
And that right there goes to the question of you knowing yourself to a point where it's like, okay, what would you regret more? What's your, like,
as
pick your
well.
poison. What
Yep.
would you regret more? Like me personally, I'd rather take a loss to go for that high R than I am to, you know, try to catch the win, or like, you know, being green and then next thing you know, I take the, and you saw it. We traded live before where you literally seen my price, where price went to 90% of my take
And you do
profit,
nothing.
and I allowed it to come all the way back.
Oh, man.
My
I
butthole
allowed it
was
to come
tight.
all the way back. I did not care.
well, you know
Shit.
yourself, right?
Yeah, I
And
know
you're-
the
yourself.
end of
I'm
that,
not going to
for
miss
sure.
out on. I'm not going to miss an opportunity for the sake of losing.
Yeah. So
It's not
that-
going to happen.
it's, and again, so like I'm talking about the math, the way to progress reviewing,
Yeah.
you're also not always going to be able to over optimize to do what the best is. Cause you might find, hey, I have, you know, 2 out of 10 that are home run 20R trades.
Mm.
And had I never closed before 20R, I'm going to be able to capture that. Right. There's also an argument, I'm sure someone's going to say, you're not looking at a large enough sample size to see what the market can give you. But like, if you shot for that, which is theoretically, and would have been in your case, the best, you know, thing, you would have lost like, you know, every other single trade outside of those ones. So it has to be practical. And what type of person are you? Are you
Mhm.
somebody that is really going to struggle coming to the market losing every day? Are you really going to struggle if you watch a, you know, price approach your take profit and come back on you? Or are you somebody on the opposite side that you're really going to struggle if price starts to move after you close out? You got to try to be real with yourself and honest. And, you know, where do you suffer that Achilles heel from tilt? Where does it come from? Is it watching the market move after you close out? Is it taking 2 losses and you throw everything out the window? And you could fine tune a little bit within that
Mhm.
as well.
I completely agree.
Great points.
Great.
We should stem this into what's easier, trend trading or counter trend trading. I think that this will be a really good take because I think that the listeners are probably wondering. My way of leading us into this conversation is I'll make you answer a question. If you could go back in your trading, all of you individually, and when you first started, if I take away the options to buy, sell, or stay flat, and I only make you pick one and then keep flat, so you can either be long only and flat or short only and flat, do you think that would make you more money as a new trader? You think about that for a second. You follow my question? Do you understand what
Can
I'm
you
saying?
repeat the
If you could only
question?
take longer.
Run that one back.
You can only I'm asking, do you think you'll be more profitable if you go back to when you started for the new trader or the struggling trader listening, and you can't choose 3 options, flat, long, or short? I'm only giving you 2, flat or long, or flat or short. With that removal of the third decision,
Creating the opposite side.
I would take the
Yeah.
flat and short.
you would do, you think you
For
would make
sure.
more money if you
Yeah.
would have not been looking for long?
Yeah,
either
I always
flat or
seem to
you're-
do better on the short side.
But you see,
too.
the perspective is, I don't even have a buy button.
Right.
I'm either short or I'm out of the market.
Yeah.
Would
Mhm.
that make you more profitable as a new trader?
If I can also identify if the trend is changed and is bearish,
Sure.
and then I can only take.
I'll give you a
shorts.
VWAP, but you'll be able to tell.
Right.
Right.
Yeah. So there you go. So I would.
So then
take that.
you think you'd make more
I
money
would
on
seem to
both sides.
struggle. Well, because on the short side it's faster,
Fair.
so I can get that satisfied a lot easier for me, at least, rather than like it takes a while for it to consolidate going long, and
That's a
then
good point.
you might catch it.
Was this a complicated question? You
No,
followed?
no, I followed
I
it.
need all
It's-
3.
it's-
I would do all 3.
I'm not letting you.
Do you think
not
you
allowed.
would?
I'm asking
So
if-
you'd be
Only
you'd be
long or
worse
only
off
short?
if you were long only or short
Yeah.
only. You
Or-
think
Let
you'd
me
be
give
worse
you- let me-
off?
Oh,
starting out.
long
So
only.
like for the
I
listen,
think I would. I think I'd be more profitable long only.
interesting.
Me
Okay.
personally.
I was short only. For
Okay.
anybody that knows me,
Nice.
Okay.
I was a small cap short for a long time.
Okay.
And
This is my theory.
I made a lot of money. I also went bald
Right.
crying.
That's fine. sacrifices, Chris.
Made
Sacrifices.
a lot of money,
So,
lost a lot of hair.
I got out of that game because I couldn't take the stress and I couldn't take the nature of it.
I just think that this is something I wish I would have done. And that's why I start this
Yeah.
the trending versus non-trending conversation with this question, because I think,
What are you choosing? Sorry.
I mean, I'm just picking one. I'd have to go back and see which one would make me more profitable.
Mm-hmm.
But the reason I ask this is because, like, when I talk to struggling traders, I'm like, dude, stop even looking at shorts. Just read VWAP and only do longs. Either you're long because we're in a buying position above VWAP, or you're flat. And like when I do that, I can see after a couple of days, they are less stressful because now they don't have to be thinking in 30% probabilities, 33% probabilities, flat, long, or short. They're thinking in 50-50.
Yep.
I'm either in because buyers are in control and I'm long only, or I don't know what's going on, or maybe sellers are in control, so I'm out. So you see how like you're changing the percentage of probability
The
in a
movie
way.
21.
Is that what that's from?
The movie 21. When
That's a great
there's-
movie.
Yeah, it's a
That is a good
phenomenal
one.
movie.
Kevin
but,
Spacey, right?
Yeah.
Yeah, he's like he's the teacher.
I don't know if
right?
we can use his name right now, but
Yeah.
but no, so there's the 3 doors, right? So he was in the classroom and he was like, okay, well, you're on a game show, there's 3 doors. 2 of them has like, something valueless, and then there's a car behind the third door. So he allows him to choose one door. He said, that's not it. That's not the door. Now you have a 50-50 chance. And then he ended up choosing the right door. So basically what you're saying is once you eliminate that 33%,
You
just
increase your
gave-
ability to be right.
You just gave 33% and distributed.
I gave you
it upon-
28% or 27%
Yeah, and
more.
distribute that to 2 options.
What do you think,
So
Chris?
I mean, I think that there's some plausibility to it. In our system, we do have a way of differentiating when you should be only long, only short.
Okay, so that's kind of
So
what
I
I'm
think
talking
it kind of works and speaks to that point.
Just for the new trader, though.
Yeah.
Like if as you gain experience, of course you're not going to just be one side, and not in a futures market where you know what I mean.
I mean, if you're trading an overly bullish instrument like
Sure.
a stock index or gold
Well,
on
I mean,
a
dude,
bull
if we're,
run,
if we're talking about
the
stocks,
odds are going to be in your favor.
arguably you should be long only stocks anyway,
Mhm.
right?
Yeah.
100%.
So it's like, yeah. What's your take on this?
Yeah, I think it comes down to simplifying things, right? You're
That's all I'm trying to
like you're
do.
doing, right? So I would agree that for the most part, if you eliminate more choices, more ambiguity, the option to take on different directions, you'd probably do better.
But
'Cause
what
you
ends up happening, you fear missing out
You would.
on the moves in the other direction,
Mhm.
Which
and
is
that can lead people to
that-
tilt. But if you
it
let
could
go
be.
of that,
You're forcing.
imagine how much more simple your trading
Yeah.
is.
Mhm.
You're forcing patience. You're gonna
Yes.
have to wait for one direction.
I
to
said
set
I'm
up,
long only.
right? So
Dude,
I,
you know who did this? You know Rebecca from Tradeify?
yeah.
Okay, she's
Yeah.
Rebecca's been in our mentorship for years. Like Rebecca used to write blogs.
I think
for me
she's
back-
crushing it nowadays. I think I just saw like
Ask her what she did, bro. It
Which went
came
long
from-
only
It
for
was short only. It came from her
Oh.
TradeZella stats in our weekly
U.S.
coaching calls.
indices. Sorry.
Yeah, and like you would look at her stats because in TradeZella you can filter by side. They call it side, long or short. She was red, terrible win rate. Everything was bad in the longs, but in the shorts, like you were saying, it's faster. She likes it. She sees it better. So I don't know what she's doing today, but I know that helped
was a
her
piece.
get to the point that
Yeah.
she's at.
Yep. I think going a little bit further, right? Just as a newer trader, what would have helped you review, which is what you had her do
So
in
you
this
know
case.
what side you're on.
And I do that quite a bit. I will often notice I'm skewed one direction,
Sure.
way too heavy. And I'll often notice I have an abysmal hit rate on one side
That's
and
what I'm
an
saying.
insane hit rate on the other. Like I did some reviews, for example, we're just talking about it. why was I taking significantly more shorts during the bull run, right, on the U.S. indices, trading ES and YM?
No, but that's what
and
I'm
what
saying.
did my hit rate look like? I almost could not. I had almost 100% win rate over a pretty large sample size on longs, and I had a trash hit rate on
That's what I'm
shorts.
saying.
It's like it's right in front of you. It comes down to reviewing. But yeah, look at what direction you're trading. Also, lean into what your style is. Maybe
Right.
you just have that contrarian view, or I 100% agree. It's the staircase up, escalator down, right? So those shorts plays can be really, really quick. Maybe that feeds into some momentum trading. So knowing yourself as
like,
well.
let it-
And to preface what I said, like once you have confirmation that the trend has gone that way, has switched that way, not doing counter trend.
So now to the trending versus counter trending conversation. Do we think that it's easier to teach a new trader one side to be a trend trader, long or short? Or do we think it's easier to teach a trader to be a counter trend trader or reversion trader? What do you think?
I think
Sorry,
it's
Chris.
the odds are, if you can identify the trend, sticking with that, whether
think
it's
so?
with a VWAP
Trend?
or moving average
Okay.
or whatever strategy is,
You think trend?
and then be like, okay, I'm only taking longs or I'm only taking shorts.
Yeah.
That way you are on the right side of the market. At least you have the momentum on your side, you know?
What do you think?
I think people tend to have a bias one way or the other. They tend to see the market as a strong market to be faded, or they see it as a strong market to be joined.
Sure.
And I think everybody's different. So what I try to do is lean into whatever is
Bias
their
they
strength,
have,
whatever
right.
bias.
Whatever they're
If they
trying
want
to
to
do.
fade, fine.
Teach it fade.
This is how you're going to do it.
Right.
Okay. You're a trend trader. You want to wait for true trending conditions. This is what you're going to do to
But
be
it's
able to
true.
join
Like
the
I don't
market.
know any beautifully long-haired short traders. I
Right.
know a lot of bald.
Isn't
short
that
traders.
weird?
It's very weird.
Yeah. So,
No,
but it's also nice to have a system because the market's not always trending, as we know, right? We have balanced markets, or you might call it choppy or ranging. And then sometimes we have trending markets, right? So if you're a trend trader, you got to wait for a trend,
Yep.
right?
Yep.
Otherwise, you're going to be getting chopped up. I prefer trading in balance, and I'm a mean reversion trader. So I really love to fade strength and I like to buy weakness, but that only works in a balanced market, right? I don't want to be contrarian when the market's going to Hades.
No, when it's ripping, you got to either get out of the way or get on the
I'm
train.
usually standing by and waiting
Yeah,
for
like when
some
the-
type of structure to be built.
When the market slides like it did last week, I think
Mhm.
one day, I'm sitting there waiting and hoping that by 10:30, 11 o'clock, I get a pullback to join the short.
Exactly.
And then I do. I get an
Yep.
easier win, but I know there's guys waiting for that big short and then they're going to buy it back up.
Right.
Yeah. What do you think? Trend or counter trend? To teach a new trader.
Me personally, just because what I know best, I'm going to say trend.
Yeah.
But I will say this, by the math, I'm pretty sure what we range 70% of the time with
Yeah.
indices.
Yeah.
So it's like technically counter trend would probably be a little bit
Reversions,
more.
that's what he's saying. Like
Yeah,
in a
reversions,
range,
right.
trading
Yeah,
back
like
to
you
VWAP.
probably killed February because I got destroyed in February.
Yeah.
I got destroyed in February.
Thanks
so.
for the
There was
boost in revenue.
There was
many,
there was no
many did,
trending
many
moves,
did.
is what
There
you're
was
saying.
no trending moves. Yeah, all of February it was bad for me because I trade trends. Like
Yeah,
me
and the trends
personally,
don't
when-
sustain.
and they don't sustain.
They've
So
been sideways.
I'll look at a play, and if it's going up, then I'm going up.
Right.
And if it goes down, I'm going down. I'm not going to really question too much of it as long as my setup is there, obviously. But
course.
I look at what's in front of me.
Makes sense.
I don't try to. The worst trades that trigger me and put me on tilt is when I try to outsmart the market.
Which is in
So-
a way. Well, we'll come back to that.
Yeah.
I want to hear your take on this
No,
because
it's-
you're a bit of a reversion trader. I
Yeah,
look
a
at it
little
from
bit
the
more of
outside.
reversion.
Yeah.
So like it's a tough question. I don't know what the answer to that one
What
is.
did you think
don't
I was going to
know if
ask? Easy ones?
there's- I don't know. I don't know if there is a clear cut answer. I would agree with Chris to say identifying who you are as a person, and then building off of that is probably going to be the path of least resistance. Trying to make yourself this buy the breakout, pushing up when you are constantly everything inside of you screaming at you to short. You're going to struggle more than if you just leaned into your strength. I will say, and I struggle to find that within myself a lot as well. I will say the market seems to suffer from inertia. Trends seem to prevail. It can feel very tough to be a contrarian mean reversion trader some days, but for the most part, I do think most traders, or at least guys that I find, have this kind of mentality where they find it easier to buy a market that's falling. They find it easier
Oh my
to
God, bro,
sell a
all of
market,
us.
right?
Like you're
Every-
lying if you look at it like when it's
Like,
moving and your brain doesn't
why
think,
does so
I'm going
many
to go
tra-
back the other way.
Yeah, which is why so many traders lose money, right? We're
Correct.
constantly doing the
I cannot
wrong
do-
thing.
At least I'm at the point now where when it's moving lower and my brain says, that might be a good time to buy it. It might bounce.
Look how far it's gone.
At
Yeah.
least I don't click. I
Yeah,
used to
that's the
click
line
buy.
right there.
Like
Yeah.
the first time you'd have the
Yeah.
idea. And it's like, no, bro, how many times do
And
you
then
have to
buy
see
more.
it?
Everything else
Right.
in the
But
in
how
the
many
world.
times do you have to see it go against you? And then you have that thought of, I would have just been better off selling it.
Yeah.
Like,
and then before you click the sell button, before you go, okay, I know what I want to do, I'm doing the opposite, and now I made money.
you're leading me into my next point, which is I think there's a saying in trading that people should throw away. Is it too high or is it too low? That is
No.
a terrible subjective.
See, one of my favorite
analysis.
sayings
Yeah.
is the opposite of that is it can always go
You
higher.
always go higher.
It can always
When you
go
agree,
higher,
like,
right?
oh, it's so low, I can't sell it
Yeah.
anymore. No, bro, it's going lower probably.
Yeah.
And there will be a mean reversion setup eventually. It might not
Sure.
happen today.
Or right. Or
Right.
when you want it to.
But I found that you have to wait. There's got to be some type of structure to it. You can't just pick bottoms
No, it'll smoke you.
or tops.
So I teach it to people and I'm like, when you're under VWAP and we're moving lower, you could tick the bottom and it may rise for 15 minutes, but I will show you in 3 minutes, it gobble up that long because we are in a downtrend, we're under
Right.
VWAP. So you're like inching your way through enemy lines
Right.
and then boom, you're going to get seen by 18 snipers and lit up.
So half the battle just becomes recognizing the condition,
Right.
and doing the appropriate task or
Sure.
setup, whether it's waiting or executing in a proper manner based on that condition. I think the longer you trade, the better you get at that.
So then we touched on the trending thing, I think enough. What about like actual time at the desk? Because again, we're talking to new traders who are searching for profitability, searching for consistency. I have a theory. Again, I think new traders spend too much time at the desk,
Which
too
I
much
ta-
time
I
trading.
talked about that in
the
our
last
last
one.
podcast. And when Lawrence said 1 to 2 trades,
That's
that's
what it
it.
made me think of.
First thing I thought of was, man, I wonder how long what his trading hours are.
Right.
Oh, 9.
You have that clearly defined?
Yeah,
Like,
almost.
Yeah.
Even if you look at my stats, I'm trying to get off the desk as fast as possible.
Right.
I think that overexposure is what kills majority
Oh,
of traders.
100%.
Like
for
I
sure.
am huge. When I take any type of trader under my wing, I tell them, you know what, we're going to restart everything. 1 trade per day, get off the charts, stop looking at them, because I truly think that the more, unless you build some type of endurance over
Time.
time,
Yes.
right? And that's probably where Chris is.
That's
right?
where I feel
So-
like I'm at now too.
Yeah,
Where I could
exactly.
trade all day.
Exactly. But you choose not
I
to.
choose not to, 'cause I
Right.
got my
At some point,
priorities.
you got to ask yourself, like, how much time is worth this money?
Am I making
right?
money in the afternoon?
Exactly.
Just because I can doesn't mean I should.
You know what I'm saying? So, me personally, I take 2 max. I try to get off the desk as fast as possible. I want to enjoy my life, right? And I just think that the more that I spend time on the charts and I'm micromanaging and looking at every single move, I am opening up the door for me to either, if I'm in a trade, I'm opening up the door for me to interrupt the trade or do something stupid.
Right.
Or if I'm not in a trade, I'm burning mental energy that's going to allow emotions to leak
should
out.
have taken
and
a
next
break.
thing you know,
Go off
I'm
the
on
desk
to-
for 15 minutes.
yeah, and then when
And
you
then
blow
come-
up 2 days later, you're sitting here trying to figure out what the hell happened.
Well, I know we talked about
This
this
is why.
before, Chris. Like you see people come into the beginning of the week, trade really well. By the end of the week, they're a different person. It's like
Exactly.
you're torched by the end of the week
Right.
because you've been sitting at the desk for 5-6 hours a
Exactly.
day looking for trades when you are in year 3, brother.
Exactly.
You should be there for 90 minutes max.
Max.
I do want to, before I go to you on that, I do like your take on like with the new trader, erase everything, 1 trade a day, because I do think there's something to be said about building good habits slowly rather than trying to fix bad habits you've built fast over a long period of time.
Exactly.
Yeah.
Yeah. So
Do you want to add anything?
Yeah, absolutely. And I do take a lot of trades, but I'm usually done trading by noon.
Yeah.
So they just have to be short in duration.
Yep.
And we get a lot of setups in the system,
Yep.
which is nice. So I do agree 100%. There needs to be some type of endurance built up. But also some people do have time. And I think exposure to the markets does help, but it needs to be in a specific fashion. Just sitting there clicking buttons all day is not going to be beneficial. So typically we'll have structured hours for trading, usually the morning or maybe night, whatever it may be for that person's situation. But if they are going to have more screen time, it needs to be structured differently.
Sure.
So we have drills and we have
like that.
other types of
Practice.
practice.
We talking about practice?
Yeah. Because I call actual real trading time, we call that game time.
Cool.
Right. So outside of game time, are you getting ready for the game? Right.
love
Where are
that.
you
I'm
practicing?
stealing that.
Right. So if I was, playing sports, right. If I wanted to be good at a sport, would I just show up to the game, hope to be good?
Allen
I have a
Iverson would.
question for
Yeah.
you though. So what signals do you get, even like you personally, when you're
Mhm.
trading, when you're like, I need to cut this short? Like the first, let's say your first 3 trades, you're like, okay, I'm messing up
Out of
right
the
now.
pocket.
I'm
When do
out
you
of
know
it.
you're out of the
How
pocket?
do you exactly? Thank you.
Usually
what
it's
signals are
it's if I'm out of pocket, it's usually because it's emotional or the market is experiencing a volatility expansion
Mhm.
that is not good for my trading system.
Right. Gotcha.
So I tend to do better under volatility compression.
Mm.
And I know that. So when there's expanding volatility, I'm in trouble. And if I'm forcing stuff under those conditions,
Getting cooked.
I need to I'm getting cooked.
Yeah. So
Right.
days after expansion is probably where you.
It could be intraday. It can vary. There can be variables intraday, but for the most part, I'm looking for more things to calm down, become more stable, and that's where I can that's where my edge lives, and I know that.
Now, I do have a question for all of you guys. Do you guys use like your stop losses or losses as an edge within itself? Because I know for me, because me personally, when I place my stop loss, they're actually invalidation points.
Yeah.
So if I get stopped out two
Something's wrong.
times, I call that the predator zone. It's
Mhm.
probably where he thrives in most, and I need to get out.
Mhm.
So I was wondering, do you guys use your stop loss or your losses as somewhat of an edge to let you know if you need to either get out, get market feedback, change your bias, or something that have like a positive role? And that's what I do with a lot of my traders too. I try to give losses a positive role in their trading system, so they can have some type of exchange of value, and they're just not.
I've never
losing
thought of
just
it
to
like that, but
lose.
I like that.
Yeah.
approach.
Yeah.
I feel
Yeah.
like what I'll do is like the stop loss being a part of the edge isn't in the setup.
Mhm.
It's in the but
discretion.
it's
maybe?
in well. Let me give you an example. Price moves away from VWAP and we're
Mhm.
moving higher,
Mhm.
and it pulls back to opening range high, but it's not off of a VWAP. So I could see a deeper pullback, and I might want to buy it again when it pulls back deeper. But I'll still play this setup sometimes with a stop loss that would take me out of the trade in that deeper pullback where I may have to buy it again. So
Mhm.
I feel like it's in my edge a little bit because if this holds and we go, good, I'm in and I make some
Yeah,
money.
right.
If it pulls back, I will do it again and try again. So I
Right.
feel like if my stop is at one of those intermediary levels,
Mhm.
it's not invalidation. I'll try longs again.
Yeah.
But if it is at an invalidation point, I'm probably going to have to stop
Yeah.
and give a break and wait 30 minutes, wait some time to see if I need to actually get on the other side of the market.
Mhm.
So in that sense, well, both of them, I guess it is providing information, which would be
Yeah.
considered edge, but it's not necessarily in its own changing the direction I'm going to trade. You get what I'm saying?
No, I get where
Especially if
you're
you're
coming from.
trend trading too, and it's like if I hit the stop here, then maybe I have the wrong bias.
Yeah,
Exactly. So I think
Right.
that's
Some
a
type of
bigger
market
stop.
feedback.
Yeah, that's the
Yeah,
bigger stop.
for sure.
I think it definitely depends on whether you're scalping really aggressively, high frequency, or you're 1 or 2 trades a day.
Yes.
So
Right.
I've been attempting, I always come back to scalping. I always come back to trying to trade momentum, aggressive on NQ. Or my bread and butter trading YM primarily. If I'm wrong, I'm dead wrong. I'm pretty much wrong once. And
So the
I was-
stop is at the invalidation point where
this-
something's
yeah,
changing.
the stop is wide where if this move would be highly, highly unlikely to go and tag my stop and then come all the way back down to a take profit.
Right.
It's almost not that it's almost never gonna happen, but it's very unlikely.
Sure.
I'm more of the wide stop, wide take profit.
Mhm.
Manage it, with discretion in taking profit. But that's pretty much how I run that. And I enjoy that. I feel have comfort in like I'm wrong. I got cooked. It ripped in the
Good.
opposite
See you later.
direction.
See you
Yeah,
tomorrow.
100%. I was completely dead wrong on direction. Like
Knowing
that's
like
it.
there's power in saying I'm wrong.
Yeah.
And then if it gives me that information, then again, the consistency and the profitability come to me. Do I YOLO back into another trade or do I listen to the
Yeah.
stop loss and listen to the information?
And
it's
also,
giving me?
and another thing is just like when I was listening to you, Zach, it's like you want to leave everything on the table, meaning you want to put your stop loss at a place where you know for a fact it is because another thing that's a lot of things send me on tilt. Another thing that sends me on tilt is when, I get out prematurely. If I get out prematurely knowing that this is still a valid setup, now I'm about to jump back in.
Right.
I'm going to do this.
Mhm.
So being able to leave everything on the table and saying, okay, this was the entry. Here's the absolute invalidation point as a stop loss. And here's a take profit that I know is attainable.
Yep.
Right. And just leaving it right there.
Yep.
It will give you, even if you lose, it will still give you some type of
Where you feel like you're being consistent.
yeah.
You're following a process.
Yeah.
Yeah.
Exactly.
So you're super attached to process. A lot of new traders are chasing P&L. They
Yeah.
won't have that same feeling until they've gone through this,
for sure. Over
day
and
after
over
day,
and
over and over again. Yeah. So thinking about this from a process perspective, should new traders be journaling all of their trades?
Yeah.
Do we all agree that is?
I think so.
100%.
Because there are people on the internet that are telling new traders that it doesn't matter. Isn't that
Ah.
crazy?
I
That
mean,
is
if you're
crazy.
like, I think like the only way you get me to say that if you're someone who's really high frequency, you're going for something that's super high frequency, and then maybe you're journaling like batches.
See, I
But
say
you
the
gotta
opposite,
be
bro.
journaling.
I feel like the only reason to not talk to me about journaling is if you're buying VOO and just leaving it for your
And then
retirement.
you don't have to
Yeah.
You don't have to
journal.
journal that, brother. We all
Yeah.
know what you're
No,
doing.
but you have to track. And again, this
It's never
Even
been
in a
easier
high
to do it,
frequency,
too,
It's
with-
never been easier to
right.
do.
Even in high frequency, you don't have to write an epic poem about every trade,
Yeah.
no.
but some type of journal of what the setup was, why you took it. And if you're trading so high frequency and fast that you can't do that, you're probably too fast.
It probably could be
That's a
easier.
problem.
Like that's what I would say.
Yeah.
Like there's probably a little bit easier of a way.
Yeah.
But I feel like you have to almost condition your brain. You talked about this before in our last podcast of like the process and like my obsession with my process has to be greater than my obsession with making money.
Yeah, absolutely.
Because if I get the process down, I'll make more money than I can even imagine
100%.
right now.
Yeah, absolutely. Like me, if I'm pretty sure if you guys saw like I journal a lot during the trading session. I feel like I get the most information in the heat of the moment when my emotions are running, to a point where I truly believe that the more that you journal during the session, also I do like drawing tools, annotations, you know what I'm saying, notations on the actual chart itself, because conviction is so important when it comes to trading, because it's like, when you have something of risk on the line, something that's valuable, your hard-earned money, then you need to know that you did everything right. So I sit here and I try to attach each emotion to what price action triggered, you know, this emotion, what made me feel a little insecure or made me feel fearful, and what makes me want to press the gas on it and why. And, you know, I literally attach the mental edge to the technical edge, right? So I think that everybody should literally do that.
I love that. Yeah, I think we got into a good debate at the boot camp last year about backtesting too.
Yeah.
And like, I was like, I don't know if I believe in backtesting as much. And you were like, you know, the backtesting is really important to you. And I think that if I look back at my newer, like when I started trading, I feel like, I needed to learn the pattern recognition. But as one of our final talking points, I'm curious to see what everyone in here is doing for backtesting. Because I get it every week. I get one person in the Black Shirt Club or on stream that's like, hey, I'm backtesting and this and that. Can you give me some feedback? And I literally tell them to stop. I know you're going to hate me, but I tell them to stop.
Crazy? I haven't backtested in a while.
Oh my God. Are you kidding me?
Yeah.
The mics are gone.
No, we went through the whole
argument, bro.
this
was the talking point of the boot camp last year.
I'm going to explain why.
Because wait, let me
You convinced them.
Lawrence was in the
No, he did
audience.
not.
Lawrence is in the audience, and I'm on stage, and me and him are having this full on, and Brian was there, had this full on thing. Bullshit. Fuck your backtesting. Right. All right, go ahead.
The reason why I don't backtest as much is because I came to a point where I feel like I mastered my system, where I'm like, this is what I want. This is what I'm going to choose every time. I accept the cons. I accept the pros. And at this point, I'm working on myself at this point. Like, I'm not
Welcome to the real world,
Yeah,
brother.
I'm
Welcome
not-
out of the backtesting.
Yeah. But backtesting.
You've been
in the
inside for 8
beginning-
hours a day looking at all them charts, bro. You
But
gotta get
it
outside.
was necessary.
It was.
No,
No,
necessary.
that's what I'm saying. I'm
in
agreeing.
the very beginning, I feel like in the first, and this is my experience, I feel like in the first couple years, you need to
Because you
backtest.
need the patterns.
You need the patterns. You need the exposure without putting risk on.
'Cause every day is so
And-
different.
And forward testing is important too. I'm not saying that it's not, but I'm saying both.
What
I
does
think
that
you need-
actually mean?
Forward testing is just
Isn't that
Creating
just
demo?
testing?
Yeah, it's demo.
No,
It's pretty much
stop.
demo,
I
right?
thought forward
I thought that's
testing
what
was
that
when you're
was.
trading and just tracking the trades.
I mean, yes.
It's a fancy word
Okay.
for
That
demo
one
trading.
confuses. But like,
Yeah.
I think
Forward
backtesting
testing with low risk.
to me is just like,
You're,
Hey.
you're trading the system.
like
Yeah.
I'm saying, like, new guy. Hey, bro, you just need to look at 5 to 10 charts a day of the same entry and the same stop loss, so you get some patterns under your eyes. I totally agree with you that I'm assuming you're not backtesting at all.
Well, we have very defined setups. So it makes, I think in order to backtest, you have to have very specific
Yes.
criteria where it's non-negotiable, right? We can't all sit
But
down.
you're spending time backtesting
Yeah.
right now?
I don't have to, no.
Okay.
But the backtesting is more for my community,
Okay.
showing them how often these setups
Show them the markups,
materialize
show them the trades.
and how effective they are.
Sure.
So every day I do a recap on NQ. Boom, here's where the setups were.
Yep.
Bump.
Okay.
Next day, here's the setups.
But that's
Bump.
educator Chris. I'm talking
Educator
about Chris at home.
Yeah, no, I don't backtest.
No, because you're at the point that he was just talking
Correct.
about.
Right.
Yes.
Exactly.
But it can't be subjective, right?
No,
You
it
can't
has to
sit
be.
here and be like, if we three of us are
That was
trading
a
the same
buy,
system,
that was a
and you're like,
sell.
no, that's really not
I
kind of the
wouldn't no,
setup.
wait,
This
the
is
best backtesting line. This is how I knew it was all bullshit, except for the pattern recognition. Because originally I was backtesting for statistics,
Yeah.
thinking I could do better manual than some computer program. That's stupid to begin with. But I feel like over time it was just to teach me the entries. That's it. Once I realized I was doing it for pattern recognition and not for statistics, I started to see more of like how my setups were wins versus what my losing setups look like. Because I started to say to myself, oh, that I would take that one because it's a win.
Right.
Oh, that one, that loser. Oh, don't count
I
that.
didn't take that one. That one
wouldn't
didn't
take
work.
that. Dude, of course I wouldn't take that one. It was at 9:37 in the morning. Why would I
That's
take
where
that?
the risk of backtesting has the risk of
Human bias.
curve fitting.
Curve fitting.
Mhm.
Yeah, you've curve fitted to yourself. You curved it right around you. You
Yeah,
think it's perfect,
right.
but you're still losing every day.
That is
Correct.
true.
Any thoughts on the backtesting,
So get
boys?
some integrity,
Yeah.
basically, is what
Yeah.
you're saying.
Keep it real with yourself, bro.
Yeah.
But that's why I think getting into trading at 18 or 19 is
I think a
bad.
lot of it's subconscious, though. You
Yeah.
know, you can look at this chart and see things that you wouldn't otherwise see in a live market condition, whether you're aware of it or not.
Agreed.
Feels different as well. Canvas
Yeah.
print different.
sure.
Yeah, it does
Yeah.
something different.
You make a good point. Like if you're young, I don't think you can do trading. I started at fucking 17 or 18. So like I'm speaking, an 18-year-old kid doesn't have the brain power to do this really well. I don't think. I think as you get older, you get better at all of this.
Mhm.
And then it's easier to teach that person. It's easier to be a better trader as you get older. Nothing substitutes the time for it. But like as a young trader, I didn't have the ability to say to myself, you're full of shit. You would take this trade. You're lying. This is impacting your win rate. No, you bamboozle yourself a little bit. Yeah.
I
What were you
completely
gonna
understand.
Backtesting, I'd say hierarchy. Like live trading with risk on the line, right? That's going to teach you the most, the fastest. That's the real thing. It's game time. I think there's absolutely a place for backtesting and trading on demo, paper trading, especially for beginner traders starting out. You don't have anything that works. You need to be able to develop the skill without losing a whole bunch of money. Market's not always open. You're going to need to test and gain some confidence. Backtesting is a good spot for that. As you progress, as you go, I don't think there's as much of a need for it. I think it's probably better spent reviewing or maybe working on something that's a little bit deeper, reading another, trading psychology book or reviewing some emotions and trying to figure out, how you're prepping for your day. But there's always going to be a spot for back testing for anybody that needs to go back in and, even just a little bit of, I'll say, I'm trying to make a case for it, right? Because I'm just trying to take the other side of this. Maybe it's like a warm up, a little bit of a warm up. Maybe you've been off the desk for a while. You're in a really gnarly losing streak and you kind of want to go back through to build a little bit of confidence. Some of it can be false, but I think going back through and kind of reminding yourself and refreshing yourself cannot be a horrible thing. But yeah, outside of the beginner, get onto demo trading and then get onto
Tracking the trades that you're actually taking.
Yeah, absolutely. And then, low risk on the line. But for starting out, for sure, you need trading view and replay mode.
Yeah, I think it's important at the start too. I mean, just to have screen time, like when we started talking about indicators, or like the way the chart looks, you need to get used to the way the color pattern, if you're using VWAP indicators or whatever, just like if you're playing soccer or trying to get good at jujitsu or something like that, time on the mats or time on the field, some's going to be better than others, but you still got to spin that. That doesn't mean you want to be in there all day.
No.
Right.
But how do you make your touch better? If every time the ball comes to you, the soccer ball, you can't control it.
Right.
How do you get better?
Yeah.
Practice. So what is backtesting? It'll practice, you'll get better. Yeah. But is it actually going to make me pass that ball to the guy correctly the next time? Like in the game? No, not necessarily.
Right.
That's then where that, I think, live documenting of your trades and trying to figure out what you do best comes. I think we all agree on this.
Yep.
Important. Okay, boys, this is good. So listeners, if you stayed all the way through, hopefully, I think we did. We covered a lot of topics in this one. So this will be good. I'm sure there's timestamps below so you guys can pick around, skip around, see where you want to probably listen to it a couple of times. But boys, thank you for doing this. Clay, Zach, thank you guys. I appreciate it. Chris, thanks for making the drive. Lawrence, appreciate you, brother, as always. Listeners, thank you for listening and staying all the way through. Make sure you're subscribed. Make sure you click in the description to follow the boys, connect with them, and we'll see you guys next Saturday for another episode.
Everyone's like, oh, I got my payout. I did it. I'm like, that's okay. Now you got to do 1,000 more.
Trading is not a money printer, as much as the kids like to say that. It's a money multiplier. It takes money to make money with props, with live accounts.
Part of the problem of the prop space in general is it's allowed people to take payouts when they haven't really earned it yet, in my opinion. I just think base hits are the name of the game in the prop space. Like the home run mentality just doesn't serve you well. Yes, of course, it's nice here and there, but now we're even seeing when you ripping those home runs, dude, some of these firms aren't paying it. Cough, cough, top step.
Prop trading is like more of a mechanism to actually learn the markets and learn to trade, which is everybody goes through that phase too. Then I think evals are better.
Anything in life, if you give your effort for 5 years and you aren't seeing insane progress by then, more than likely that thing's not for you.
What's up, traders? Welcome back to the podcast. We got a special episode today. We're calling this the Prop Firm State of the Union. I think this is going to be an intense conversation, hopefully with some controversial points made to educate the audience. I think the goal here is we've got a lot of experience across from prop firm CEO to guys that are running massive communities. So the goal is going to be to give you guys as much information as possible. We want the new traders to make informed decisions and the experienced traders to hopefully find maybe a new way to take some payouts, because prop trading is exploded in the last couple of years. And as educators, as people running communities, we know that very, very well. Some of us got on the train a little bit later, but we're happy to be here. So before we just jump right in, let me introduce everybody and then we'll rock out. So On my right, I got Chris Drysdale. Chris and I have done a couple podcasts together. Chris has an amazing community. Chris is a author as well, the VWAP Wave book, and another book coming very soon. I got Tanner Owings here. Tanner and I just did a podcast. You guys have probably seen that. Also a very frequent member of the show, so we're happy to have Tanner back. Same thing for Zach. Zach and Clay were both with me last year when we did these podcasts. Zach streams every day on YouTube, The Real Deal Futures. And then we've got Clay, CEO, founder, Top One Futures, Top One Trader. So boys, where should we start? Well,
We're back.
we're back, dude.
We're back, baby.
We're on our way to Colombia. Sad Chris isn't coming with us, but maybe next year. We're in Florida today to jump in and hopefully save the prop space from some losses and then get some of our guys that are already taking payouts making more money. We're going to talk about some of the drama and the ways that prop firms have fucked traders over, to put it not lightly.
No.
And then we'll talk about the things where I think some of us have seen people in our community find holes and ways to make more money. So I'll kick it off with an interesting question to start the controversy. The industry started with evaluations. Everybody was like, you have to take a challenge to get funded. And then once you're funded, you can get paid. Then 2 years ago, the industry shifted a little bit and instant funded accounts came out. Now we see evals becoming very popular. So I'll pass it to Zach first, our resident knowledge base of all things prop firms. Zach, prop firms are an easy way to scale up your trading. Do you think it's easier with instant funded or with evals, with challenges?
It's a good question. I'm glad to be the resident knowledge base for prop firms.
Well, you really
here.
are, bro. Nobody knows more than you.
I try.
These
I try
guys
to
are
do.
here for the good looks. You're here for the knowledge.
I try to do the research. I trade it myself. It's a good question. I don't know that there's one that's easier or better than the other. I really do like both models. I think the instant funded side fits really well if you just want to skip the eval altogether, go right towards trading money that you stand to withdraw. You're going to have some drawbacks, right? It's a double-edged sword. There's no real free lunch in the entire space. You're going to have tighter consistency rule. You're going to have a higher upfront cost, probably more trading days to pay out and in between payouts. But what we've seen with a lot of the eval models, not to jump right into some of the stuff that we've been seeing more and more from firms with getting through an eval that's inexpensive pretty quickly, and then some really advantageous rules in the funded account, like daily payouts, no consistency rule, some with wider caps, some with tighter caps, but no minimum trading days to pay out now on a lot of these. So I'm a big fan of both. I think it does depend on the trader. If I had to pick gun to my head, I would go eval. I think I would prefer to get through the eval pretty quickly and then get to a funded account maybe with some wider rules.
Do you think instant funded is still unknown, or do you think people know about it and it's just people are still choosing the eval based on price?
I think the eval models have really kind of come full circle where they've gotten more and more aggressive, right? So it was, maybe a longer eval and they started to get shorter and shorter. And then once you got into the funded account, maybe you still had a consistency rule or you had a lot of minimum trading days to pay out, 5 minimum profitable trading days. And so a lot of traders saw instant funded and they said, well, I'm going to have to trade for 5 days anyway. Now the eval models have gotten even more aggressive with some of these no consistency daily payout styles where you can copy trade and scale even if there is a payout cap. So I think people do know that the instant funded's there. Some of them are always going to pick it. They just want to go right into it. They're comfortable with more money. They can deal with some of that, downside of consistency rule. But the eval as a forefront really in the futures prop space has gotten super aggressive. So
Tanner? One of the biggest mistakes that I see traders making is they're choosing their prop firm based on emotion instead of logic. They're chasing cheap accounts, flashy payouts, or whatever somebody posted on Twitter without understanding the rules, the drawdown mechanics, or whether the account even fits how they trade. That's why I'm really excited to announce today's sponsor is Prop Firm Match. Prop Firm Match lets you compare over 40 different vetted prop firms on the stuff that actually matters, like trailing versus static drawdown, payout rules, copy trading limits, pricing, and long-term scalability all in one place, propfirmmatch.com. What I also really like is firms that I've actually traded with, like Top One Futures, are listed on Prop Firm Match as some of the top firms for 2026. So you're not just getting random rankings, you're seeing real, relevant options that serious traders are using. Now, if you're treating your trading like a real business and you're not trying to gamble between account roulette to hope your payouts hit, head to propfirmmatch.com, do your research, and then use the code MATCH at whatever prop firm you choose to save the most money possible. Again, propfirmmatch.com, compare your firms, and then hit that code MATCH with whatever firm you'd like to save on your next challenge. Now let's get back to the video.
I'm a fan personally of straight to funded.
Okay.
And that is just because, again, it's personal preference. I really think that's what it comes down to, because I always see two sides of the coin. You got the people complaining about consistency rules. Personally, they have helped me more than anything take more payouts, honestly, because I noticed when I didn't have a consistency rule, sometimes it's never enough, especially when it's sim profits, right? Like, well, this could have been 5K. This could have been 10. I could have sent this, could have sent that. And it leads really into that bad mindset. I don't think it really builds a lot of consistency in trading. And yeah, you can build up these big balances, take some big payouts doing that, right? But I personally have found more success doing straight to funded with a 20% consistency rule, because I come in, I make my money, and I leave. And like, that's it. Or I lose money for the day, whatever it is. And actually, ironically, I'm experiencing this right now. And I think this is going to be one of the hottest takes, is I kind of like the ESS score.
What?
I'm not going to lie. I
Really?
swear it's actually helped me be less degen, because so when it comes to so for those out there, ESS score is something that Top One Futures has on a couple of their,
You're the only ones that have it,
I
right?
think the only ones that have it. Yeah.
There's some other
there?
firms. Yeah.
Yeah, but it's called equity stability score, and basically takes your best day and your worst day, and that creates your consistency score overall that you need to hit. So I hadn't really traded many of those. I was doing the straight consistency where it's 20%. And of course, when it's like that, I'll give numbers as an example. I'd shoot to make 2K on a 150K account, and max loss in the day would also be like 2K, right? But the max loss set on most of those accounts is like 3,600. So you have a day where you just happen to like not respect that and blow it, and then you lose 3,600. Now you're 2 days behind with a consistency rule, right? So that kind of helped me initially be like, okay, like,
I get that.
hit your consistency,
Absolutely.
whatever.
Yeah.
Now with ESS, it's like when I hit my max loss on it that I've set personally, I'm like, dude, you're literally going to run yourself into the ground and make it harder to take the payout if you break this rule.
So stop.
So now it's an automatic stop. It's not even a question. So I noticed myself actually being a bit more disciplined. I'm like, yo, I kind of like this in a weird way, even
That's a
though it
hot
is
take.
hard. I swear
That's
it's a
a
hot
hot
take.
take.
And I don't think
But-
you explained it exactly. The ESS basically takes your winning days and your losing days. The consistency score is just your winning days.
Just your winning days.
That's
Correct.
for the listeners. That's to understand.
Correct. So
So he's got to cap his downside, is what he's saying,
Correct.
and that's helping him be less of a degenerate.
exactly. So the math on that, let's say $1,000 is your best day, $1,000 is your worst day. It's still a $2,000 consistency score with the ESS.
Okay.
But for me, I'm like, okay, I need to make 10K in order to take, this payout or whatever it
Right.
is. So in my head, it's like, no matter what, I'm like, you can't try to go for one more when you hit your max loss and be like, and then get to that 3,600 threshold. Because now it's turning into, you got to make 20 grand or
You know,
something
it's gonna kill you.
ridiculous. So it's easy for me to be like, no, that's not worth it. That's
Right.
stupid.
Right.
So I kind of mess with that. I like, I kind of like that a little bit. But again, for me personally, straight to funded, the consistency scores, I just think base hits are the name of the game in the prop space. Like the home run mentality just doesn't serve you well. Yes, of course, it's nice here and there, but now we're even seeing when you rip in those home runs, dude, some of these firms aren't paying it. Cough, cough, top step. Like I'm getting stuck right now with my 3 XFAs that, not that they hit home runs, but like, dude, I had 3 days where I did 10K in each of those accounts. And now they're locked up because all this metal BS, and I didn't even trade metals, and they're accusing me of hedging a
Sorry.
combine and all this, all the bullshit. And I'm just like,
We'll come back
Okay.
to it. We'll come back to the
We'll come back
drama.
to that, but
I want to go to Chris, because Chris, you have a large community.
Yeah.
So you've heard now we're split here. Instant funded eval. What's your take?
I do think the straight to fundeds are nice products, but when I speak to the overwhelming majority of traders, most of them belong in an eval,
Why?
right? Because they're learning, right?
Okay.
They're probably going to blow it. They're still trying to find their edge. They're for the most part not consistent with their trading. So the overwhelming majority belongs in evaluation. As they get more consistent and they find some ability to regularly even just pass an evaluation, let alone get a payout, right? We need to start passing evaluations first. Then you can get some consistency there. I'm a big fan personally of the all-in evaluation, where the activation is rolled in at a lower price, personally, because I can confidently pass it and I'm all in at a lower cost.
I think that's a great.
So I have no problem with that model. It's my preferred. I do think straight to funded is great, but for a consistent trader, there's no problem lowering your cost basis,
Is it thought like
passing the evaluation, and
the
go
cost
for it.
basis coming down is like, you're a new trader. You're probably not going to make a bunch of money in the first year.
Mhm.
Keep the cost as low as possible.
I would say any business is looking to keep the cost as low as
Fair.
possible.
Fair.
I think it's a good point
Mhm.
that a lot of prop firms are serving traders that are just getting started. They're coming off of demo, and the instant funded is super solid. There's a lot of advantages, but like Chris said, the vast majority on their first account are not getting to a payout, right? That's just the fact of the matter. So keeping it super low in evals to get started and trying to work towards just passing in the first place can be super helpful. So I think that serves a big variety of traders, all the way to more confident, more advanced, like Chris is saying. Still makes sense to keep costs low, get through that, get to the, solid account in funded, and then maybe copy trade from
And
there.
who here didn't blow their first funded account within probably days
Or 10
minutes?
Yeah.
So I mean, it's a guarantee.
So now, Clay.
Yeah, I think pretty much I agree with everything that you guys said. I think evals, especially for traders that are new to the space or to trading. I mean, you don't want to spend all your money on a instant funded account the first time you take a challenge or 5th or 10th time. So it's a lower barrier to entry. And, if you think about prop trading as like a more of a mechanism to actually learn the markets and learn to trade, which is everybody goes through that phase too, then I think evals are better. Right. So, but as your journey progresses, like Tanner said, once people don't mind the consistency rule, and you actually have a very enlightened perspective on ESS and consistency rule, because you see it as, hey, this thing is actually helping me become a trader and harnessing in, the greed factor, over trading, all the things that would hold somebody back. Right. So, and then most people, especially when they start, are like, what's the easiest consistency rule and the cheapest account? Right. But that actually ends up holding people back a lot more, as opposed to learning to take a $600 loss or $1,000 loss or whatever you set that for and be able to walk away, or $600 win, $1,000 win and be able to walk away. Right. So the longer you keep trying to run it up, really the longer you're gambling. Right. So,
and building bad habits.
Let's
and
face
building
it,
bad habits. Yeah, exactly.
That's the problem with, I honestly think, a lot of the no consistency stuff in general is like, it's so easy to rinse an account and be like, all right, screw it. Let me just rip another eval and then full port this, pass it, go to this, and get stuck.
What are you
in
saying?
that.
The habits just get bad.
No,
And
it's
it builds a
not
whole
bad.
culture around it, and like a microcosm of sim farming and
Yes.
churning through accounts.
Aren't you the captain of the sim farming
Yeah,
team?
no, he is like the secret.
Number one, dude.
Number one.
No. So no, I think listen, it's a hot take, right? Because
And you see that culture on Twitter, right? It's where people support it. Somebody's like,
I
or not
hate
to
no,
interrupt you,
go
but
for it,
like,
go for it. Yeah.
you see somebody's payout got denied or whatever. Like it just happened with Apex, right? And turns out this dude bought how many accounts and was really just churning the hell out of it, right? And so but people were, I guess, I don't know, defending the fact that he should have got paid out when really he was just trying to rinse them and lie about what was actually going on.
We're gonna go right into the.
I think we should go there. Let's go to the
No,
sim
let's go
farming.
right to the sim farming. So
Here we go.
I've
That's the
taken some.
culture of it, right? So
Yeah, it is. I've taken some hard stances, some hot takes in the past, and I continue to learn and see more. Right, so I'll kind of let you know where my head's at with this. I think there are, and I'm sitting next to Top Level Futures CEO, so I'm going to be right down the middle with this. I think there are prop firm rules that we have to work within as traders, and at a certain point, we do have to say, what's a good return on investment for my time and money? And so getting more aggressive, really pushing the boundaries of, what you can do with the max loss limit to the profit target and going through accounts pretty quickly, it can start to make sense. I think there's a big difference between actually trying to develop as a trader at all and just coming to props and saying, I've got 20 grand a month that I'm just going to cycle through, full port on news, no stop loss, hedging accounts and, back end, whatever game I want to play. And it's not trading. It's not anything to do with trying to learn how to trade in the markets. So, I think there's like a balance there in between. So I'll speak for myself, right? I've traded with Top One for quite a while since you guys launched. I got kicked into a Top One Futures live account in October of last year. I'm eligible for another payout. It's like my 17th payout. I've been trading it super slow, consistently. And, there's great money to be made, daily payouts, no consistency. As you advance as a trader, you might say, hey, you know what? I want to trade live accounts or I want to get more aggressive copy trading. I think that can be done in the sim environment, maybe across multiple firms, copy trading. But it toes into this crazy world of full port YOLO, try to figure out a complete back end way to just game the system and avoid being banned. Prop firms are tightening up on it. So I think it's kind of a balance, right? I think if you actually want to learn how to trade, be able to manage your own money, you have to learn the skill set of trading. There has to be money management. There has to be risk management, but at the same time, if you say, hey, I'm comfortable losing a couple of evals on the way to faster payouts, losing a couple of accounts on the way to faster and more frequent payouts, I'm still going to actually attempt to trade. I'm going to actually, attempt to structure some risk here. I understand that piece of it. But it's turned into this hot button take between this isn't trading and this is all that matters, which is making money. And I think there's something down the middle there that makes a little bit of sense for everybody involved, prop firms and traders. But it's definitely getting farther and farther to the extremes, which is.
You want to go into that?
I do. I mean, first and foremost, I think prop firms have done an incredible service to the trading community, because if anybody who's been trading for a length of time can remember a time where you had to show up with a lot of capital, and when you took a big loss, that was your own hard-earned money. Right. So we've been presented with this, I think, a great opportunity to lower the risk threshold for a trader, both learning and even an established trader who doesn't want to take on that level of risk or a little more risk averse. Right. So now it's become, I see bad actors trying to take advantage of that opportunity. And it's unfortunate.
As is in any opportunity, I guess there's always going to be people that try to game the system.
Exactly.
That's how I feel about it. It's like they're not learning how to trade. Like you said, they're gaming the system.
And then normalizing it.
And then making it seem like, oh, you suck at trading because you don't know how to play this game better than me.
And flashing these big payouts
And
that are based on a misconception, which is unfortunate.
They're dishonest in many of the ways. Like the guys that are sim farming are using affiliate commissions to buy more accounts. They're not like being realistic to their audience. Their audience is usually someone who has a job and doesn't have unlimited disposable income. But they're not saying that. You know what I'm saying? They're like, no, just buy more, put it on a credit card. And I've got people that we've worked with that are in debt because of this mindset. So if you end up being someone that tries to sim farm and then can't, you actually put yourself, like you said, in a really, really bad spot. What were you gonna say?
Yeah, I was gonna say you would be blown away too by how like kind of intricate some of the ways that people try to get around the normal rules, whether it's like, different hedging strategies or group trading or just the way people, it's super like devious and like it's like
shady.
Unbelievable. It's like, dude, if you just like actually focus on trading,
You might actually figure it out rather than lying.
Do you see a majority of that coming from within the United States, outside the United States?
Yeah, racially profiled. Come on.
Outside.
Outside.
But both. We see way more of that, like it's more organized with in FX.
Yeah, the
with
Indian
Top
call
One Trader.
centers, they've shifted.
Yeah.
The Indian call centers are
it's
now
neat,
running
man.
Forex
For
scams.
sure.
Organized
Yeah.
sim farming crime.
Literally.
But seriously, it's somewhat harder to do with futures because of CME and everything's centralized. But there's still definitely new things coming up every day. You know?
I wanted to add to that point that you made there. So I think there's also a clear distinction between
A longtime friend of the podcast, TradeZella is offering you, as the listener, 20% off their journaling software. The back testing is incredible, and they have a ton of new features coming in 2026. So use the code ASFX to save 20% at TradeZella.com. Again, the code is ASFX at TradeZella.com. Hey traders, you've probably heard me mention the Black Shirt Club before. That's our group coaching program. We meet 3 times per week. We actually have a meeting today, and we are looking for some of you to fill empty seats in the mentorship. A couple of people just graduated to finish the year, so we want to make sure the group stays full. Head to asfx.biz/BSC to read more about what the club includes. You can also go to that website and book a free call with me. I'll hop on with you for 10 minutes and I'll answer any questions that you have. This is a $500 a month program. No like crazy fees, no hidden contracts, no cancel anytime. We're very flexible. We're not here to hurt you. We are here to help you make more money and help you get around traders that are trying to better themselves through more discipline and more accountability. So if that sounds like something that interests you, asfx.biz/BSC.
hey, I'm going to hammer it on props. I see this as an ROI game, and I'm going to, talk about ripping through evals and fundeds, and then here's how much money I've made. I'm spending 20, 30, 50K a month, and I'm making 100, 200, 300 versus look at the 300K that I made with prop firms. You can do it too. Just buy a $50, dollar eval.
Yeah.
So like for me, example, I'm trading that top one account. I've been talking about taking payouts from it. They're all super modest, right? Couple $100 here and there. Reasonable given the size of the account, right? You got, however many few $1,000s worth of an MLO or whatever it is. On the sim game, a little bit more aggressive. I talked about trading across a whole bunch of different firms this month, took multiple payouts, talked about blowing through quite a few evals and funded. So I think like being honest is really important about it. And a lot of guys went that way, and we saw a lot of that on Twitter.
Yeah. I think I've tried to take a little more of the focus away from my own personalized PNL.
Okay, what do you mean?
I wanted to make it more about students who are learning to trade and their successes, and less about my own personal achievements, because then it becomes the Chris show and not so much about trading, right? And what can be achieved from a normal person going from 0 to 1 year to 2 years to 3 years, and highlighting their successes.
And what we're saying, everybody, is like, if you're listening to this, you're probably in the prop game. You've probably tried it, but it's going to be really hard to not get sucked down this rabbit hole of playing the prop game wrong. And you're sitting with people who have taken, I mean, we didn't even say that in the intro. Everybody knows all of us have taken a bunch of payouts, and with a guy that runs a firm, and we're telling you there is a right and a wrong way to play it. And if you play it the right way, I think you build habits that can translate into what all of us do, is trade your own account if you want to as well. That was the whole point of this prop thing in the beginning anyway, was to get your own money up and then be able to have full control. But now, as I segue into the live account thing, before we go into more drama, with certain firms like Top One Futures, the live environment has actually become compelling enough that it might make you stay with a prop firm versus trading your own live capital. So we talked before about trading options and trading prop, but we didn't talk about trading your own money in the future space. You're not doing that.
A little bit here and there.
Okay.
I am. But it's majority like, again, I'm looking for those really good opportunities and being like, okay, like this is the day I need to put it on and do it. But I see the other side of the coin too, where I'm like, oh, this might be a good one that you can put on overnight. And then like, I'll do that with my live account here and there. And I'm like, oh, that was a bad idea.
So then Chris, what are you doing? Are you, because you're trying to take the attention off your personal P&L, are you trading prop or are you trading personal?
I trade both.
Okay.
Yep. And I trade it based on the market conditions.
Okay.
Right. So I tend to be more of a balanced trader. So once markets stabilize and we have a clear range, that's where I tend to trade better. I'll be trading my cash account. But if we're having a wildly, volatile session, I'll probably size down, trade a little more prop during those conditions, and manage risk a little better by using my prop firm accounts.
Which is an interesting point, because then that opens the prop firm up to, like, you probably as the owner of the firm look at that and go, yeah, Chris is not the only guy that's going to take the riskier plays on his prop account. So how does the prop firm handle that?
Well, every day there's swings, people handle them differently. I think if it comes down to live, it depends who is actually trading live. But like, I don't really notice it on the day-to-day scale.
Sure.
And I don't really, we don't really look at it like that.
I mean,
too
even
much.
just banning or suspending trading of an asset like that's
right,
overly
like right
volatile.
now, and that's what I was about to say. Right now is a good example to, like with the whole situation in Iran, right? Like things like that happen, and those events happen. It's like you have to prepare for them and then take that into account, or I guess like 2 years ago, I know this is a different scenario, but most people probably would remember on the FX side when MetaTrader 5 like stopped doing US traders, right?
RIP.
Yeah, and then like bunch of prop firms went under, right?
Yeah.
So because they didn't prepare for that type of thing. So from that point of view, and Matt, who is our CEO, I'm like the founder, just to make it clear for Matt, I don't take his credit, but preparing for those type of things ahead of time, help us for daily swings to not be hit so bad.
Sure.
Right. I think that's a great strategy, Chris, to like have your when the market lines up to meet your ideal setups, your ideal trading your own capital, and then when it's maybe not as ideal, leveraging somebody else's. I mean, I think that's a great approach.
Absolutely. And let's talk about, this other side of things. A lot of us have trading communities and we trade live. I don't always want to trade my cash account live, right? But I still have to show up, and I have a community that wants to see trading and learn. Prop firms gives me another outlet to trade in with skin in the game in a controlled risk environment to be able to demonstrate real live trading, right? That's not in technically a demo account. There's more to it than that.
Anything you want to add on the personal capital?
Yeah, well, this was kind of in between the really aggressive churning and then prop firms managing risk. One thing I'd really like to see, and I saw this on the new accounts from Top One, is prop firms getting clearer whether the traders want it or the prop firms want it. They have to, because guys are going to press the limits on how many accounts you can have, right? How many evals are you allowed to go through? How many resets can you have? What can you do in a 30-day period? I think that really helps manage risk from the firm side, helps manage expectations from the trader to say, hey, we're not going to be, you know, maybe banned or denied at some arbitrary level, but here's the upper limit. You know, don't go here or we're going to have, you know, an issue. And then that also, like we're talking about, maybe, you know, Chris might be an example as someone who's farther along in his career, has a really large size, you know, live account. And he might say, hey, you know what, trading for $1,000, $5,000 payout here, you know, it's just really not worth my time investment, right? So in order to make this worth my time, I'm going to have to trade these aggressively or a little bit more aggressively, copy trade a bunch of them, get through them, and I'm going to stand to lose quite a bit of them. And at least you can know what that upper limit is, comfortable from the trader side, comfortable from the firm side. So I like what's happening. I think at least, you know, let's lay that stuff out so everybody can understand what is a good use of time and money. So
Is the live environment worth it? You know, in a prop space, before we leave this conversation of personal capital or not, is the live environment worth it? I mean, Zach and I are biased. We have live accounts with Top One right now. I have cons to it. I have pros to it, as we've talked about, right? But from your guys' perspective first, what do you guys think? Is the live environment in the prop space actually worth your time to be shooting for? Or should you be just shooting to take payouts and fund your own account?
I think it depends on the firm.
Come on.
And I
Depends.
think I think it does.
I think it
Same
depends.
answer.
I'll tell you
is
why.
yes
But go
and
ahead.
no.
I'll tell you why I think
Yeah,
it
it's yes
depends.
and no, because
I just
like
busted your
because that's the thing is like just like every firm, every firm's live program is going to be different. And honestly, I feel like it is very difficult for any firm to have one live program that is like, oh my God, this is so worth it. Like this is the end all be all.
Well, if they do, they're going to change it.
Exactly. Yeah. Right. And so, and it's a common thing you're seeing now with a lot of these ones that were giving big payouts before. Now they're taken away. And like you've seen this actually change over time with Top
Dude,
Step.
in the last year,
with-
Top Step changed everything. It was unlimited payouts, basically.
Literally, yeah.
And now it's like,
Yeah. The
Completely.
only one, okay, so here's my, I've gone live with, I think, 4 firms so far.
Okay.
So when I went live with, I'll list through them. So I did Tick Trader back.
RIP.
Yeah, RIP. That one was trash, took forever, hated it. Obviously, Top One Futures was solid. I was just a dumbass and blew the live too fast, too aggressive, because I'm just an aggressive trader. Live with Lucid. And Lucid was actually one I was stoked on because they actually paid me out when I got to, they asked me, they're like, do you want the live account or do you want the payout? And I was like, well, what is it? They're like, oh, well, you qualify for the max payout. It's 30K. And I'm like, oh, give me the 30K. I'm running the bank. I'm like, I'm gone.
Yeah.
Right. And apparently like Tradeify used to do that as well. But now like Tradeify doesn't do that anymore. Top Step doesn't do that anymore. No. I bet you I was one of the last ones Lucid's probably going to do that with. I don't know if they're going to do that as well. But that's the thing is like all these live programs seem like they're kind of degressing. So in my opinion, I feel like it's almost better just to trade the sim environment unless you literally have very, very clear milestones, progressions, consistency, all that type of stuff. And you're that type of trader. And it depends if you're aggressive or conservative as well.
Let's go to Clay.
Yeah.
And Chris.
And this gets back to like really what we were talking about like 10, 20 minutes ago, because the culture of sim farming and just kind of trying to run trades up and or burn through accounts. Somebody goes live and kind of takes that same strategy to a live account. And yeah. And you know, it's like that type of trading doesn't realistically work in a live environment. Yeah. So from the prop firms, you know, I understand why those other ones are doing just that because it's washing on their money. It's not profitable.
Well, for sure.
And then think about it this way. Some trader gets down on a live account 20% or gets into a drawdown or whatever, they have no real skin in the game. Like Chris is trading his live capital, gets in a drawdown, say 20%. I don't know if that would happen for you, but you're going to stick it out and bring it back no matter what, right? Somebody gets down on a live
like,
account.
screw this.
Yeah, exactly.
Buy a new one.
Right. So, but
not my money.
Yeah. Exactly. And then they go back to the sim environment, right?
So it's hard from a prop firm perspective to have a profitable live environment. Is that what you're saying?
Yeah, I'd say that's an understatement.
And I think this is the thing is like getting there is, again, it's like when people are full porting, doing all the non-consistency stuff like that, and they reach these requirements of the payouts to get there, and they have this big buffer balance. It's like, it kind of makes sense why Top Step is doing this whole new thing where it's only 20% of your balance is going. Because yeah, all the people that were ripping the metal trades, you know, that have these 150K balances in their XFAs, they've never taken a payout before. Like you had some people in your community, which is insane. That's a lottery ticket that they got lucky with. So why should the firm have to honor that? Because they are literally gambling. And so I'm going to switch to the Top Step thing real quick because I do think this is something that's happening where they got really screwed with all the metals going on. And the way it happened, so I'm stuck right now. Literally right now, I have 3 accounts. XFAs locked up. They've been locked up for 5 weeks.
Locked up meaning you can't trade them.
can't
but you
trade
have
them.
access. You see them.
I see them. They're there in my dashboard, but they ran this thing where they had a new system that said like they caught people if they were hedging. Quote,
Yeah,
unquote.
Randy got the email.
I got the email, and my hedging one that I looked at was with a combine. Apparently, they said I was hedging a combine with an XFA.
Okay.
So I'm like, okay, it's an eval with an XFA. This doesn't even make sense. Number two, I actually did have one account with TopStep that was an automated account. I was working like with this bot basically that like it's an automated trading strategy, right? And actually under TopStep's rules and stuff like that, it's totally legal. Like you can do that. It was not breaking any rules. Like it says you can run automated
But if
strategies.
the bot puts you in a position where you're hedging, now
So
the bot gets
that's
you.
what happened apparently based on that what they were saying is I was short on the bot was short doing its thing.
Stupid.
Dude,
And then
I had no idea you were trading with bots.
Yeah, I had
That's
one.
news to
He's like,
me.
I didn't think you were smart enough for that. Dude.
no,
Look at this guy.
I had one account with TopStep.
He's
trading.
actually a
That's all I'm
quant.
doing.
Nobody knew it.
The muscles are a
I
facade.
just-
The quant
I just-
bodybuilder.
it's actually been kind of trading well and it's cool. And I've just been experimenting with it. And I just moved it over to a live account that doesn't have any restrictions or anything, a full live account. But anyway, so I was doing that with TopStep with just one account, kind of like, letting the strategy do its thing, whatever. And so, of course, like it was short on that. And I guess one day while that account was short, maybe I was in an eval and I went long. And that's what they nicked me for. And I was like, I got that email. And then since then, they haven't given me clarity. And I have 3 XFAs locked up with $14,000 each in them.
Wow.
I can't touch them. And so literally, it felt so scammy, dude. The day I was supposed to request my $15K payout from those 3 accounts, boom, I got the email that,
course.
oh, your accounts are locked.
Well, when you were
Weird.
eligible, that a flag went up
Exactly.
in their system.
And so I've been following up with them. I had to go to go on Twitter, make the post, do all of that type of stuff. And I hate doing that type of stuff. And they're just still running me in circles and not giving me an explanation. And classic, I asked them, I'm like, can you show me when I was hedging? Can you literally send me the data of the trades? And they just ignore it.
Right.
And sweep it under the rug. And I'm like, dude, I get, and I was like, I get it. This is for all the metal stuff because it happened right after the metal stuff. I was like, but a fair way to go about this isn't to be like, oh, you guys are hedging. Let's try to nick all these people and ruin them. Look at who is actually ripping through metals and gamifying the metals trades. I didn't trade any metals during that
You're
time.
giving both sides. You're saying you understand from the firm side, what was going on.
I get it.
But it's worth a look to see
But
subjectively.
take it case by case and be like, oh, this guy
what
never even
happened.
traded silver
Yeah.
or gold at all. And like we were hitting with the hedge on the eval. That's just the automated thing that caught him. Whatever, it's fine. Versus someone, oh, this guy ripped through 20 evals trying to long 15 SI contracts, right? It's like, it's different, right? And
It
so,
almost seems like TopStep doesn't have enough people to do all that kind
for sure. No, and they
Which
got
is
overwhelmed.
a crazy thing to say because they
Yeah.
have so many employees.
of. Yeah.
Mhm. Yeah. So 5 weeks, I've just been sitting
Top
in the
one,
dark.
on the other hand, they're on it.
Wait,
Man.
wait. I don't know how you guys have figured out
Instantly.
the customer service so
It's-
much better than
That's
that.
what we
Instantly.
built our whole model around.
Yeah.
Yeah, it definitely makes it seem like TopStep doesn't care about the customer as much as they used to.
Mhm.
That's how it makes me feel. And I think it started with the way they terminated all their affiliates, including me. You know what I mean?
Yep.
When they just
Yep.
rug pulled everybody
Used
and
to.
yeah, I mean, there's a lot of us. You know what I mean? Found any reason to try. So it's like, okay, if you're going to treat the people, I mean, it starts with Patrick Whelan. Shout out to Pat. I mean, Pat was the main guy that got ripped by them, and he was the main guy that helped blow them up.
Mm.
So if they're going to treat people like that, it kind of made me feel like this industry, you have to work with a firm where across the board, you see them treating everyone good, from the way that they treat their customer service staff to the way that they treat their sim traders to the way that they treat their funded traders. It's all going to be the same. So you can't just be like, oh, they just don't care about affiliates, but they really care about their customers. No, they don't care about anyone
Well,
because
customer
they just
service
think more
is-
will come.
customer service is really, dude, I grew up in the restaurant industry. So like literally like what's ingrained in me is people, customer service, like, provide value.
Yep.
So I will say that is something you guys do super, super well. It's actually legit. It is the fastest. I've obviously DM'd and had a lot of interaction with different firms for customer service point of view. We all
Remember
have,
the
right?
tick trader thing?
Yeah, exactly. That took like 4 months to get a live account. They wouldn't respond to me. Like, it's like, and again, like that's why I'm upset with dealing with this TopStep stuff. Is like I have to go to Twitter to eventually get a response now instead of in their support tickets where it's supposed to be happening.
You should actually be insulted. Patak didn't reply to your tweet. He's
I
on
know.
Twitter running his mouth all the time.
I know.
You'd think he would say something back to you considering who you are.
And I'm like, and I was trying to even be nice about it. Like, dude, just please look into this and just get it done. And then now I'm getting pissed. I'm like, all right, you guys. Like,
Well, you're not getting that money. What are you going to say?
I think,
know you're you're chomping
Right
at the
or
bit
wrong.
over here.
Listen, I'm gonna try to be down the middle with it as best I can.
Why are you so peaceful?
I
Yeah,
think
that's Switzerland over here.
Yeah,
Does he not know how these clips work?
I'm gonna be.
Does he
I'm
not
gonna
know
be.
how to get clips?
It's cool. I'm not gonna get any clips. No, this is just the honest way that I think about stuff and just my truth behind the way I'm thinking about it. I think the markets change incredibly quickly. the space itself, the prop firm space, because I was trading, Forex CFDs before, and Forex and CFD prop firms before the meltdown. It changes extremely quickly. The firms have to adapt very, very fast. The traders have to adapt very, very fast. There's oftentimes this caught in the crosshair in between, not making an excuse for the firm, not making an excuse for traders. And we continue to see that develop. I think from a trader perspective, you've got to be ready to adapt quickly. The guys that I see make it the longest in the markets and with prop firms have this pivot energy, which pivot we were joking around about, but just constantly pivoting, being able to, understand that this is going to change very, very quickly. And then from the firm side, I do think there's a lot of responsibility to say, hey, these are our rules. This is what we're offering, right? Market changes. If we don't change quick enough, and this leaves the door open for guys to trade the way that they were allowed to trade, you've got to do right by them. You can't just leave anybody out to dry at all. So I think it's this balance. From a trader perspective, I'm constantly watching. I try to stay out of just spending time doom scrolling drama for engagement, because that stuff is just a nightmare. I try to tell my community that, listen, all props are risk. Trading in general, insane risk. Markets change fast. Prop firms are going to change fast. Do your diligence. Continue to stay updated on what's going on. What does customer service look like? What are the rules that are changing? They're making advances for the better and lowering prices, widening out rules. They tightening up everything? Are they restricting things and just constantly changing everything? And decide where you want to place that risk, because we've all been around long enough to watch firms fold, to get rugged quickly. So I think it's that balance in between. I would say from the trader side, firms always got to do right by the trader, right? If you're paid for something, they should. If you paid for something and you followed rules, up to whatever that upper limit is, which more and more are getting clear on and setting, which I like, you got to get paid. You got to get paid out, right? At the same time, from the firm's perspective, markets change super quick. Volatility goes crazy. Guys trading 15, minis on silver is absolutely insane.
No, that's insane. That's actually,
and just the way that the space is developed, and the understanding of precedent evals and fundeds, right? That churning, mindset, they've got to adapt, right? And whether we as traders like it or firms as traders like it, firms don't like it. That's the way it's going to have to go. They're going to have to lay out clear lines and say, hey, this is the upper limit for it, and then change quickly as things move.
You almost need using the VIX, but for certain specific assets. Once it hits this, it's okay, we limit trading on this because it's at this.
Yeah.
Right. I feel like that's kind of where Top Step dropped the ball on that, is they got so underwater because they didn't catch on the squeeze of silver fast.
I mean, this is the 2008 story.
I'll-
That
I
happened in Lehman
But shouldn't
Brothers, right?
consistency rules prevent all of this?
To a degree. I won't yap for too much longer, but here's the thought. Live accounts, the brokerage that I trade with, they started sending out emails right away. Margin requirements went crazy, right? And of course, you hop on Twitter right after silver, and you're like, dude, it's $95,000 in your, Robinhood, which is not the one that I'm talking about. AMP was sending out a bunch of emails, to open up
one contract.
So, it's not the firms can't handle it. Look at what you would have to put up in a live account.
Firm.
Yeah, the brokerages.
The exchange also puts these margin requirements.
And it goes, as volatility goes crazy, those are going to go way, way, way up. So, firms are going to have to adapt that way, reduce contracts, whatever they're going to do. So, but I think that's important to know, because I heard a lot of people say, this is ridiculous. How could they, limit us on gold? It's tough. I understand, you paid for a product and it said you could do this. From a market and real life standpoint, look at what's happening in the real world if you're trading with your live brokerage, right? Because I have them, and I was like, damn, I wouldn't be able to open multiple, with this stuff going on. Same thing around news. They jack margin requirements. A lot of them continue to do that. I got it over the email as the Iran news broke. I got it from two different live brokerages that, hey, make this, margin requirements are jacked. So
I don't think it's dumb at all, dude. I think all these people bitching about it are just stupid. It's just honestly, it's
there's the clip right there.
Yeah, it's just clip. Again, you just hit the nail on the head. It's if AMP and these really even Tradevate itself are sending you here's the margin requirements for this.
Yeah.
If that's the actual broker doing that, then why would a firm not do the same thing?
But they have to, because the CME requires them to.
Exactly. But then people come on and keyboard warriors going, I can't believe this firm is limiting me trading this.
Well, that's a problem just of Twitter, is that everyone thinks their opinion is valid and warranted on Twitter because you can type it. Meanwhile, we're saying, you have to be realistic of what's going on in the real world.
And well, there's an unrealistic expectation that things will never change
Right.
in the prop space. And it's
Meanwhile,
like,
listen
dude,
to
we're
what
in
he
the
said.
markets. Like
Markets
It's the
change every minute.
ultimate
It's literally
adaptation,
one of
adapt
the
or
few
die.
places anything can happen.
Anything can happen.
And it never fails. You know,
Never
so
fail.
like,
And it will always surprise
it
you.
will always. That is, I think, one of the cool things about the space is that it will continue to evolve and go back and forth. Like evals, instant funded. You know, different things will be restricted. They'll come back. I mean, it's all based on the trading behavior and then the actual market conditions themselves,
I think
right?
it-
But to think it's never going to change is just
Ignorant.
going to be something to complain
That's ignorant.
about.
That's
Because it's
So I
just-
traded at an actual prop firm, right?
Right back in the
And
day.
what most people don't realize, this is what I talk to my traders about all the time, right? If you work at a real prop firm, do you know what you're going to have? You're going to have a risk manager, right? That's your boss, right? They make the decisions for you. You don't get to tell them how much drawdown. You don't get to tell them how big you want to swing today. You don't get to tell them really much at anything. They are the end all be all when it comes to the prop firm's money,
I got a funny story.
right?
So when I worked at the prop firm at T3, I'm
Mhm.
sure you could tell us a
Yep.
similar one.
Mhm.
The guy that ran compliance wasn't the risk manager, but he was involved with the risk
Mhm.
manager. He was this bigger than you, big dude, big like
Yeah.
black dude.
Possible.
He said,
bigger than you.
No, bro. Super,
kinda
just like
big.
you though. The,
Kinda
big,
big.
the biggest dudes are they're so nice, right? So he was such a nice guy to me.
Yeah.
And he would tell me, he's like, I yell at these guys. Like he would like when we went out, I went to the holiday party once. He was
Yeah.
like, I have to yell at them. Like that's how firm the compliance and the risk managers have
Yeah.
to be. You know what I'm saying?
Right.
Where they have to like literally feel like their job is to yell at grown ass men
Right.
to put the constraints in place to keep the
Mhm.
firm's capital safe. Because
Right.
that's all it's about. It's literally about deploying the capital to keep it safe.
Right.
No one's even thinking about that with sim prop firms now.
Yeah, for sure.
So there is a bit of entitlement, right?
Oh
Just
my
because
God.
they paid for something, they're entitled to whatever.
Oh,
they
Chris, it was
want.
$100.
Yeah.
You don't know?
Right. I spent $100 on this. How dare you tell me? Right. And it's just not reality.
Right.
It's just not. Right. And prop firms are a business, and anybody who's running a business, you know, there's risk, there's liability, there's all these things that are in this equation that most customers don't think about.
No.
And they have to.
No, I think people underestimate how many customers prop firms
Mhm.
have. I think people think prop firms is a small niche. I think they have no idea how much volume
Right.
some of these firms are
and
doing. It's
how
disgusting.
complex it
Rip
is
it,
with the
yeah.
different softwares,
Mhm.
CRMs, the platforms.
Tracking drawdown on
Dude,
right.
yeah, it's super complex.
Now,
Yeah.
like you were saying, even tracking how many accounts is someone buying before they're farming us. You know what I'm saying? So let's pivot for a second. I want to talk payouts, and then we'll maybe get back to some individual firms. With payouts, we talked eval, instant funded. I think that was a good way to start the podcast. But now, like, okay, I've done a couple of prop accounts. I'm the listener. I've done a couple. Haven't taken more than one payout. What would be the best advice for that trader? We'll go to you first, Clay. Best advice for that
So
trader
the
who's taken
scenario
one,
is there,
but not consistent.
right?
So he's
They've
got
already
one.
taken payout.
Already gotten one, but it's been 6
And-
months, 8 months since my last one. I'm looking for that consistency. What
I
would you say?
And they've just been trading for 6
Yeah,
months.
Up and down, break even, close to
I think
payout,
that's-
blows
I
it.
think they're doing a great job.
Okay.
Honestly, I
Yeah.
mean, I think that if you've only been trading for 6-8 months, already taken a payout, hopefully you're in a good trader community. I think that's like
We'll say it's
incredibly
been 6 or
important.
8 months between their payout.
Oh, between their payout.
Yeah, so they've gone into a lull. What would be the advice to get back on the horse to get that next payout?
It would probably be get in with some sort of community, like have some sort of
That's good
mentorship
advice.
or something like that.
New
I mean,
information.
if you took a payout on your own, just like grinding it out, figuring it out, I think that's pretty amazing. You're in the small percentile, so you're gonna have to get around some people or some mentorship to really like step up. the
Great
game.
answer. Great
You
answer.
know, I think that is the most real, and whether it's trading or business or, you know, whatever it is you're trying to do, I think that's what it is. But I think that you're in a great start.
Great
if you're
answer.
that person.
What do you think, Chris?
I think survivorship bias is a real cognitive bias that most people deal with. And we live in an echo chamber where you only hear about those who are successful.
Right.
And it's a very small percentage.
Mm.
And we tend to think that it's more common than it is. And it's not. So I agree with Clay 100% that if you've gotten one payout, you're already ahead of the game. But maybe you got a little lucky and you need to work on your consistency and you need to work on your mindset. Hopefully you're working with traders who have a longevity approach and not just a hit and win type style.
Love that. What about you?
Yeah. I'll agree with what both of you guys just said. For anybody listening, first off, almost nobody makes money trading. Almost nobody makes money with prop firms, especially not consistently. If you're in between payouts, you're not consistent yet, I'd say size down and slow down. Hop on one eval. Go back to demo, right? And then come off of demo and stay on one eval maybe until you work yourself towards some consistency, at least prove some concept. It also, I think, depends like for a practical approach. Also depends on, where you're at. Have you been trading for 1 to 2 years or, 8 to 9 years? Do you have a lot of capital? Is $1,000 a lot to you? Or, do you own your house and your business and you've got hundreds of thousands? So that's going to really play a big impact on the way you're going to approach trading in general and props in general. But for anybody that's in between, size down, slow down, focus on the process. Sure, you could YOLO hammer it and get lucky for a while, but you're even going to suck at that. You can't apply any potential edge at all that you think you have. Try to create a process, try to create something that's somewhat sustainable on a small scale, keep risk low, waste your money there, or not waste your money, but pay tuition to the market there, and then build. As soon as you start to have some consistency, some confidence in what you're doing, then build out from there. But I watch so many guys that are just like driving the car with the wheels falling off, and instead of slowing down, this is not my
They
analogy.
just crash.
But yeah, dude, instead of slowing down to change the tire and just taking that break and then making it to your destination towards profitable trading, you're hammering the gas pedal and everything's flying
good
off the
analogy,
car,
bro.
and the thing grinds into the ground because you run out of capital, you burn yourself out, you go, this sucks, it's a scam, I hated it, and I wasted, a year. Like it's a long game. It's
Even
a
you think
super-
that car's a stupid way for me to get to my destination. I need something else. No, you just need a different car.
Yeah.
So I would, before I go to you, I'll just play off of my answer to the question is just try a different prop account. I think a lot of guys keep trying the same account. It might not be for them. Go to eval, go to instant funded. I think you got to try a different car. That's my simple answer. I like your answer too. What's yours?
I'm gonna do a hot take and be like, I don't think any account's gonna save anyone. I don't think any firm's gonna save you either. If you've taken one payout and it's been 6 to 8 months and like you just can't, it all comes down to being what a real trader is about. What does the journaling tell you? What does the review tell you? What does the data tell you?
Good answer too.
What does your setups tell you? Right? It's like that's props in all these accounts. They are vehicles and to make money. Like that's the vehicle, right? It's like that's it. But it's like the core of trading itself is the skill. And so I don't like if it's a skill issue, you need to look at where are there gaps in the bucket, right? It's like if you have a bucket with a bunch of holes in it, it's like where are those holes and how can you slowly plug those little holes of your system of everything going on overall? So it's like that's what I think about it truly, because no random account or like, oh, well, this account only has this, so I'm going to be better at this because of that, or this doesn't have this consistency, so I'm going to be because of that. No, it doesn't matter. It's like, do you have edge in your setup? Do you actually know what you're looking at? Was your first payout luck? Like honestly, like I know getting a payout is a really like big deal. I know for a lot of people out there, and I'm not like gonna say this to bash any of you because it is like a good feat if you can accomplish one payout. But can you accomplish 5? Can you accomplish 10? Can you do them consistently? I think that's really what matters, because if you're trading a real live normal account, like when I used to trade options back in the day, I would get to a threshold on that account where I would be up $5,000 or something on the account overall, and I would wire out the money, and like that's my payout. And that's essentially, right? How many times can I do that in a month? How many times can I pay myself in a month? Like that's really what it comes down to. So everyone's like, oh, I got my payout. I did it. I'm like, that's okay. Now you got to do 1,000 more. Like, okay, like how can you recreate it, right? So yeah, if you're stuck, definitely there's periods of time where like you're gonna be flat, you're gonna go sideways, you're gonna have red months. Like we just talked about this on my pod, like with you, and you're going to have months where even deep in the game, you're flat or surviving or just like barely making money. But that's part of being a trader, because it is ebbs and flows, just like life. So it's like, learn how to navigate that, learn how to do the real work of like, do you have edge? Are you actually looking at your review and doing everything right? Do you have a process? Or are you throwing stuff at the wall and seeing if it sticks? And guess what? You can throw stuff at the wall and maybe it will stick and you'll get that payout or two. But can you do it consistently over and over and over? That is true trading, in my opinion.
So when you take the first payout and you're now down this prop firm rabbit hole, what's the secret or the sauce to taking the second payout in the account? Let's talk about tips for, are we leaving a buffer? Are we trying to like just rinse it? What do you guys think about that? Chris, I'll go to you first.
Don't spend tens of thousands of dollars on evaluations trying to get it back fast, right? We need to have some type of controlled growth and investment because it can get out of control really, really quick.
Sure.
So generally, if you're running into inconsistency issues, the solution isn't to ramp it up. Great example with the car, I thought. But it needs to be controlled. If you can't be consistent in one account, you're not going to be consistent in 10.
Right.
You're not going to be consistent in trading 5 different firms.
So don't even go to copy trading until you show some,
if
because then you're just making your expenses up.
You're playing a payout game. You're not playing a trading game.
And that takes away from focus on the skill.
Correct.
Okay. Any take?
Yeah, I think working on the skill set of trading itself, working on your edge, working on your process, right? Staying disciplined, and then understanding, not to bring it back to that, where do you want your spend to be? How much capital do you have to trade with, right? Is your goal to not lose one or two accounts that you're trading and to work towards, a payout, hopefully? Set a reasonable expectation for that. You're going to get paid a minimum payout or middle of the road payout once every 2-3 months as you're starting out. Maybe that would be like a great goal for somebody. Are you somebody that says, hey, you know what, I'm going to work a little bit more aggressively, I'm going to lose some of these, I'm going to get funded quicker, and I want to copy trade? As you start to gain some consistency, you're going to spend a lot more, you're going to work yourself towards larger and more frequent payouts. At its core, though, anybody starting out trying to grab onto some more consistency, like just hammering it just does not make sense. But also, like, what is the risk to reward? What is your trading capital for props? And then what is your expectations? And like we started to touch on this, I think comparison is such a gnarly one in our space. Again, so many guys are displaying these massive, massive numbers. Same thing in trading. It's not somebody, this is not my quote either. Trading is not a money printer, as much as the kids like to say that. It's a money multiplier. It takes money to make money with props, with live accounts. If you're going to, come to this game very slowly, you can scale, but it's going to be that slow growth. Don't expect the results that somebody else has 10 years in that's, trading with hundreds of thousands of dollars in, capital for prop firms, for live accounts. It's just not comparable. So focus on that growth and actually developing the skill set. And then where are you at? Where are you at in your trading, in your experience level, your capital allocation, your general risk tolerance, and understand what that really looks like for you as a person, and then proceed that way.
I had Zach on the podcast, Zarb. You guys all know Zarb from Prop Firm Match. He was saying last year his focus was to spend less on prop firms, so his payouts would be more. He doubled his payout and literally cut his spend in half. He said because
that's a big lever for
Huge.
all he did, he said, and this it's coming for a question for you. He said he, of course, was tracking everything, but he made sure that on the accounts he'd buy for all different firms, Top One, Tradeify, everybody he trades with, that he took more than one payout on each account. That focus of not just rinsing the accounts when you get over the buffer, that helped him increase his profits dramatically. So I'm curious, can you share any stats? I know how much of a statistician you are.
I'm the idea guy.
Any big picture numbers you can give to the listeners about, like, hey, if you take two payouts, you're maybe more likely to get, like, is he right to think that you're more likely?
Yeah. And I was actually talking to Zach because I go on the Prop Firm Match stream with him sometimes. And great guy. And like, I think when this is a little different answer, but when traders start to become profitable, they want to trade more, right? So like they're sitting, I did this, right? You get a payout or two payouts and you're just like, all right, I got this down. So then next thing you know, if you're just trading the open for an hour, and that's your normal time, you're sitting there all like until 2:00 trying to continue to start to make money. So I think everybody goes through that cycle. So less is more in a lot of ways. And I think that's probably the approach that Zach was taking.
Buy less accounts,
But
building off your point, have a budget almost. So you're not just buying 10 account credit card debt.
Right.
So you have a budget, and then you try to get
Exactly.
more payouts out of those accounts that you're allocating for.
and then being more strategic, creating a buffer to answer your question, I think is super smart, especially if you're like committed to taking payouts on this account rather than I'm going to get paid out 4 times this month on